Guys, do we have laborers on now? Just to be sure, can you hear me clearly?
Yes, I can. Yeah.
All right, fantastic. All right, it's 11 on the dot. Good morning, everyone. Good afternoon, good evening, wherever you are from any part of the world. Welcome to the first edition of the Nairametrics Economic Outlook for 2022. This event is themed Your Money, the Economy, and Government Policies. So for those of you that have been buzzing us, asking and trying to find out what to expect in 2022 for Nigeria and of course the global economy, this is the session that you don't want to miss. So I'd like to use this opportunity to welcome all our participants from all over the world. I can see you guys coming in already. Thank you all for joining in. As usual, there will be an extension on YouTube in the event that we hit our capacity for today. There's usually an extension on YouTube. So in case you maybe drop and you can't come in, just visit our YouTube page, Nairametrics, youtube.com/Nairametrics, and then you can get to join as well. Thank you all so much for being here. I have an amazing panelist, as you can see. So just to take you through what to expect. So we're going to have two presentations, and then afterwards, we'll dive right into the panel discussion. As usual, my name is Ugodre Obichuku. I am the founder of Nairametrics, and I'm always super excited to host this economic outlook. I'm going to start first by introducing our panelists. First off is Andrew Nevin. Andrew doesn't need much introduction. Andrew, you should have a Nigerian name by now, though. Anyway, so Andrew, Dr. Andrew Nevin, you guys know him. He's a lead partner at PwC, foremost consulting firm globally. He holds a PhD in economics from Harvard University, an MA in philosophy and politics from Balliol College, Oxford University, where he studied as a Rhodes Scholar and scored 2 goals in the 100 University Blues ice hockey match versus Cambridge, and a BSc Honorable in Computer Science and Mathematics from the University of Western Ontario, Canada. In April 2011, he was named Strategy Consultant for the year for 2020 by the Management Consultant Association in the UK. Andrew Nevin is the partner, financial services leader, and chief economist at PwC Nigeria. He is a regular in our economic outlook. So always pleased to have Andrew on the show. Andrew, very much welcome. Glad to have you here. All right, next up is Madam Adeton Dosumu. Adeton is the head of fixed income, currencies, and treasury at FBN Quest Merchant Bank and non-executive director, FBN Quest Asset Management. She has over 22 years career and experience skills in a range of treasury capabilities, including fixed income securities, assets, and liability management, foreign currency trading, and derivatives. Adeton joined FBN Capital in 2023 as head fixed income and treasury and successfully established the fixed income trading desk as a major markets division revenue generation unit that produced profitable trades in the first month of service, worth over 737.3 million. Panelists, can you mute Mr. Yes, thank you, Liberos. She was previously head of fixed income treasuries for UBA, where she ensured that the bank met its primary dealer markets maker, PDMM, and the money markets dealer goals in the bonds and treasury bills trading dealings. Adeton Dosumu, we are glad to have you here today. You're the only female panelist on the show, so we're glad to have you here today. By the way, if FBN Quest has always been a partner for Nairametrics Economic Outlook, and as usual, very excited to have them on board this year as well. Next up is Liberos Oshoma. For those who, are very familiar with local TV stations, politics and all the debates and intelligent discussions that you have, Liberos is a regular here. Mr. Liberos Oshoma is a Nigerian lawyer and head attorney at the Liberos Oshoma Chambers. He also serves as the group company secretary for Roda Commercial Ventures Limited. He is a public affairs analyst with a passion for advocacy, discussions around constitutional matters, politics, socioeconomic issues, human rights, and development in the legal system. He has in over a decade transformed into one of the most sought after political analysts, I said that earlier, and social commentators in the country, featuring on major Nigerian media platforms like Channels, AIT, TVC, Silverbird, just think of it anywhere you find Oshoma. Oshoma belongs to several networks and groups like Illegal, In-House Law Jobs, Legal Tech, Innovation Network, Law Jobs Network. The legal expert has skills in legal research, corporate law and litigation, employment law, intellectual property, among others. Liberos, ecstatic to have you on the show today, on this panel today. Liberos is going to be giving us insight into politics and social political issues that can affect us this year as we look into what Nigeria might look like in 2022. Next up is my friend and Oga, my chairman, Olufemi Babem. This is the second stint on our Economic Outlook panel as a panelist on our Nairametrics Economic Outlook. Olufemi is an economist, chartered accountant, and seasoned tax advisor. He specializes in assisting individuals and organizations plan their corporate and tax affairs to create sustainable value for the business. Recently, he led a team that derived more than 7 billion naira, that's about $70 million tax benefits, as one of the leading indigenous companies in Nigeria's oil and gas sector. Also, he has actively initiated and delivered advocacy projects on behalf of companies and industry groups that has resulted in legislative amendments and favorable rulings by regulators. Olufemi's skill sets includes business impact analysis, strategy, due diligence and transactions deal support, tax advisory and planning, financial accounting, tax function transformation, tax technology selection and implementation, tax cost optimization, and tax advocacy. Furthermore, he facilitates technical training programs for regulators. Femi, always glad to have you on board as well. Thank you so much for being a part of this event today. And last and definitely not the list is my very good friend, Faye. Faye has been part of the metrics of the world. I'm sure you've even forgotten some of the early articles you sent us back then when we were just starting up. Faye is a qualified accountant and has worked in the UK's financial services industry across banking, private equity, asset management, and insurance over the last 15 years. He has been writing publicly on Nigerian economic and social affairs for well over a decade, and his writing has appeared in BBC, Course Africa, and several Nigerian newspapers, including Nairametrics as well. Most recently, he has co-written a well-received work of popular Nigerian history titled The Formation. In case you guys haven't gotten the book, go and get that book. It's a bestseller already. Formation is the making of Nigeria from jihad to amalgamation. In his spare time, he's also a photographer and lives in Hertfordshire, UK with his wife and 2 sons. Faye, glad to have you here again today. Thank you all so much. So that is our lineup. You can't beat this. This is not Super Eagles. This is a lineup that's going to get to the final, I mean. So glad to have all our participants as well, and to the Nairametrics team that is behind the scenes coordinating everything. So we're going to have a super session today, guys. As usual, As we go on, if you've got questions, please just drop it in the Q&A section here, and then the Nairametrics team will pick up questions, and then you have those questions. We'll throw those questions to our panelists at some point as we move on. Just to run through the sequence again, we're going to have a presentation right now from Andrew Nevin. After that, Femi Babem would also have a presentation, and then we'll have first round of questions. And then after that session, we move straight to the panelist session that will be joined by Adetun Dosumu, Feyi, and Liboros. They will join Andrew and Femi, and then we'll have an all-round discussion where we will discuss your money, the economy, and the outlook for Nigerian government policies this year. Thank you so much. Andrew, the floor is yours. Andrew, you're muted. I'm not sure I can hear Andrew. Andrew, not sure I can hear you. Can anyone hear Andrew? Here.
No, I can't hear you either.
Yeah, Andrew, we can't hear you. Check your mic.
Yeah.
I think we should be able to hear you now and say something. No, still can't hear you. Still can't hear you, Andrew. Technology, it does happen sometimes. So let's give Andrew a bit. I'm sure Andrew's going to come on pretty soon. All right, so while we wait for Andrew to mic check, I think we can put up Femi right now. And then after Femi's presentation, Andrew comes on. So while Andrew works his mic.
Okay, thank you very much, Ugo. I was hoping Andrew will go first so that I'll write on the back of his presentation. Okay, but I have a very short couple of slides, or have a couple of slides that have been put together. I don't know. I was hoping that would go up here, but I can share my screen from here if that is okay.
Yes, you can share a screen as well. That gives you better control over the presentation.
Okay. All right. So let me know when you can see the screen. I believe it should be up now.
Can see the screen?
Okay. All right. So good morning to everyone again, and glad to have the opportunity to join Ugo and this very esteemed and astute team to deliver value on this economic summit. And it's always a pleasure to be here with him and everyone on the team. So I have a very few minutes to share with you on the economic impact of government's tax revenue drive. So I'll be writing, like I said, hope to write on the back of Andrew's presentation because of the timing. I was supposed to start from a review of the 2022 budget. So I believe everyone can hear me.
Yep.
Loud and clear, loud and clear.
All right, great. Okay, so we all are aware of the impacts that COVID has had on economies, both in Nigeria and globally. And the major impact is obvious in terms of government expenditure and in terms of borrowing. We've borrowed, most countries have borrowed in the last 2 years, much more than they've borrowed in a long while. So it's had significant impact on government's revenue and how those revenues have been expended. And Nigeria is not excluded from this impact. In fact, it's obvious from the economic recovery plan that was put in place. The target for us the target funds needed to revamp the economy was estimated about almost more than 3 trillion naira. So there's a lot of spending that needs to be done to continue to move the economy up and take us out from recession and continue on the path of growth. So it's obvious from the projections in our 2022 budget. For example, the projected growth is about 4.2 billion. 4.2%. Sorry about that. And in terms of total revenue, the projected revenue is about 10.74 trillion. However, the deficit that we have in the budget is about 6.39 trillion. And this is about 37%. So what this indicates is that we still need to borrow funds to meet up the gap or the difference. So to fund about 37% of our budgeted expenditure, government still needs to go into the market to borrow, whether from local sources or from global sources. The only way to then mitigate the volume of borrowing or the amount that will be borrowed during the year is to put a lot of focus on tax revenue or on tax revenue and other sources of internally generated revenue. As we all know, crude oil revenue is dependent on us being able to meet the projected production levels, and is so much dependent on the global price of crude oil. So once there's a sharp decline in global price of crude oil, definitely our crude oil revenue is definitely going to be negatively impacted. So the only indicator or the only revenue source that is so much under the control of the government is the tax revenue source. And that's why there's going to be a lot of focus this year on how government is able to raise revenues from taxation and from other sources that are clearly within the control of government to be able to block a lot of the deficit that would have gone into, or that would have to raise from by way of borrowing. So projected non-oil revenue this year is about 2.1 trillion. And this is an interesting number because as at last year, the figures were about 1.7, 1.8. But before the end of the year, we had already, sorry, it was about 1.6, but we had already exceeded that budget. We had already exceeded the budgeted revenue from CIT and VAT from last year. And already the budgeted numbers for this year of 1.225 is something that's clearly from performance of last year, we are definitely going to exceed that this year as well. So what the government has then done in terms of trying to raise the revenue sources is to introduce, as we've done in the past 3 years, past 2 years, and this is the third year, is to introduce the Finance Act. What the Finance Act has done is to amend some of the tax laws and other fiscal legislation to ensure that the government is able to reform the laws, ensure that we can raise revenues, bring it up to international standards, be able to tax more of the digital economy, because that's a big thing for us now. So the Finance Act introduced changes to about 13 pieces of legislation, which I've listed here. So you have the Capital Gains Tax, the Companies Income Tax, the Police Trust Fund Act, the Insurance Act, and the Value Added Tax Act. The objectives, like you've also seen on the screen, is to improve domestic revenue mobilization, to improve tax administration also, make legislative changes to our laws to capture things like the digital economy, to also reform the financial services sector, how insurance companies were taxed or used to be taxed. That has been reformed now based on this Finance Act. There have been changes made in the previous act, but this act has made further improvements and clarifications to changes that were previously introduced. And then we talk about the to introduce more transparency in the management of public funds by amending the Fiscal Responsibility Act and the Finance Control and Management Act. So what are some of the expected fiscal changes? So what I've done is to categorize them, according to the various business impact. So you have the business profit. The key changes that would be introduced this year is that there will be an increase in the effective tax rate, not the corporate tax, because you have education tax that has been increased by 0.5%. You have the Naseni levy of 0.25 that has come in, and then there's going to be the enforcement of the Police Trust Fund this year. So effectively, there's going to be an increase in the corporate tax rate or in the effective tax rate for corporate businesses of about 0.6%. This year, the government intends to broaden the corporate income tax rate and enforce that a bit more. One of the key areas which has been in contention has been whether educational institutions will now be liable to pay tax. And from the amendment, it appears that educational or schools that have been set up for profit will now be taxable entities. And then you have foreign companies that are providing the digital services. For those of us who are very active on YouTube and Twitter, LinkedIn, you would have started receiving mails, or those who do business using those platforms, you have started receiving mails and notifications that there would be an introduction of the Nigerian VAT. And so those entities, in addition to the VAT, would also have tax footprint, corporate tax footprints here in Nigeria. And this is in line with the global trend to try and bring in the profits earned by these giants or these big digital service companies into tax here in Nigeria, tax some of their profits here in Nigeria. And one of the considerations there is the introduction of the deemed tax. This has also been a contentious issue because government has clearly said this is not a digital service tax. It's just a deemed tax that will be applicable if those companies do not file returns, or we are not able to, or the government or the tax authority, is not comfortable with the returns that they filed. Then we have the option of assessing them to a deemed tax. When the minister was presenting this, she talked about a 6%. 6% is clearly a significant sum if you then compare to the rates that the digital service tax rate that is applied in other countries. And then from the state government level, we see a lot of aggression, yes, in terms of how governments intend to also show up their IGR. For example, I think Kaduna State has reviewed its target from development levy business premises by close to about 600%. So that tells you that there's going to be a lot of focus on it, both in terms of expanding the base of taxpayers and also in terms of the rates that will be applied. For household incomes, as incomes earned by individuals, there's no change to the tax rates. But for employees, especially if you have your deferred premiums, if you have your premiums on deferred life annuity contracts, you will no longer be able to take a deduction for it when you are paying when you are calculating what your taxable income is. For consumption, everybody has talked about the sweet tax. It's not really a sweet tax, but I mean, that is the simplest way to caption it. It's also been a topical issue, how government is then introducing a 10 Naira excise charge on sweetened drinks, carbonated drinks, and non-alcoholic drinks. There's still some clarity that has to be given by the government on how this will be implemented. But from the way it's been coded in the law, it looks like a cross breed between what you have in the UK and what you have in some provinces in Canada, where even though we've made it, or we intend to charge it on the liter, the charge is actually calculated per liter. But in actual fact, what you want to target is the sugar content that you have, looking at the objective of introducing this particular tax. Then consumption also, you have broadening of the VAT base. We are capturing the digital service providers of goods and services in Nigeria. And then there's also an increased focus now on imported services. So if you receive a service from a non-resident company, whether it's a tax advice, for example, or you receive engineering drawing, or any form of service from a foreign company, you as a Nigerian beneficiary will now be required to self-account for the VAT. Otherwise, you will then be exposed to taxes. So you have that, and then you have the dispute between the federal and state government regarding, who should be responsible for charging VAT. This is significant because while the federal government rate is 7.5, for some of the states that have introduced their laws, the rates vary from 5% to 6%. So how this would turn up, or how the Court of Appeal and the Supreme Court will decide this would also shape up or would impact, what would then happen from a consumption point this year. In terms of investment, now we'll have capital gains tax on disposal of shares subject to certain exemptions. And then you have dividend and rental income earned by unit trust that are now fully exempt. So what are the impacts? First is that surely these measures would lead to an increase in government revenue. So that's a positive impact. From the business side, you have the impact on on businesses from a competitive point of view. So if you look at manufacturers of sweetened drinks and carbonated drinks here in Nigeria, you then wonder what impact the additional 10 Naira would have on their profitability. And then when you compare to countries across the West African region that haven't introduced this, how would this impact when, especially looking forward to the full implementation of the African Continental Free Trade Zone Agreement, how this will impact the level of our competitiveness. From a target GDP growth rate, there are studies that have shown that an increase in corporate tax rate payable by companies, or a 1% increase, a 1% decrease in the corporate tax paid by companies has almost a 0.6, 1% positive impact on GDP growth in the medium to long term. So also when you then think about the negative impact that a 1% increase in the corporate tax rates would have, would most likely have also a 0.6, 0.7 negative impact on the growth rate. So the increase in corporate taxes and how companies are able to absorb some of the taxes coming up may also impact the projected growth rate of 4.2 for this year. The economic competitiveness, I talked about the fact that our deemed tax for digital companies is about 6%. If we go by what the minister said, this is significantly higher. If you consider that in Kenya, the digital service tax is 2%, is 1.5. In India, I think it's 2%. So 6% is going to be significant. And the consideration for businesses, for those businesses, then is, does it really make sense? Is Nigeria competitive to attract many of those foreign companies to also come in? So we hope that when the guidelines are then issued, and if this is then fully implemented, it should actually not be 6% and be a bit lower. The removal of the exemption on taxation of shares would definitely have an impact on foreign direct investment, especially for portfolio investors. So those are the key implications. And then from a consideration, this is what companies should put in mind or bear in mind as they plan their activities, individuals also for the new year. So prepare for increased tax authority action. In the Finance Act, the FRS has been given powers to deploy technology to companies. And that technology is supposed to help them extract data and information. So we are going to see a lot of, maybe not aggression, but there's going to be a lot of action from the tax authorities to try and shore up the revenue gap and ensure that we get more revenues from companies to fund the budget. Businesses have to review their operating structure for tax efficiency. Otherwise, with the new taxation of digital services, imported service tax, that will VAT on imported services that will be enforced this year, there will be more exposures to businesses. So there's a need for you to look at your operations, how you're structured to optimize that. Investment for investment portfolios in view of the changes to the capital gains tax and how real estate trusts and unit trusts are now taxed, you need to review your portfolio of investments and decide, what would be the most efficient for you from a tax perspective, and then be proactive about compliance. In the Finance Act, the penalties for some of the offenses have been reviewed up. Governments are going to be more aggressive about imposing penalties now. So ensure that your compliance is taken seriously and be proactive about that. And then lastly is for you to get your PVCs. We can't overemphasize this. This is an election year. Well, this is an electioneering year in preparation for 2023. And so it's important that we all get involved in the process and help in shaping, how policy will then be done for the country going forward. So thank you for the time. I think I can then hand over now to Ugo and Andrew.
Thank you so much, Femi, for that instructive presentation. My God, I got my heart thumping here with a lot of taxes. All I see here is just taxes, money getting out of my pocket. Jeez. Anyway, we're going to go back to you, Femi, at the panel discussion. So there's a lot of questions already that I have here for you, and of course, the rest of the panelists. But in the meanwhile, let us switch to Andrew. Andrew, are you ready?
Hi, good morning. Can everyone hear me now?
Yes, Andrew. Femi, you might stop sharing.
So I really apologize. But it's interesting. We've been doing this for 2 years, but I think it illustrates something a really critical principle here that I think we've all kind of learned from COVID, which is the principle of resilience. And we always need a backup plan. I've seen too many business plans where people don't really understand the degree of uncertainty around the world. So people ask me, what's the economy going to do? And I say, I can give you a view. I actually don't really give very many views because I don't make predictions, especially about the future. But you can have a view, but the issue is not what your view on the economy is, or oil price, or GDP growth. Your issue is, can you run your enterprise so that it's robust under a wide set of conditions on that? So that I think is an interesting principle. And of course, we had tested everything all the panelists prior, and then suddenly it didn't work in the critical moment. So I do have a presentation which I'll share, but I'm on my phone now. So I think that what I'll just do is talk for a few. I was only asked to speak for 5 or 7 minutes. We'll see if I can.
Well, to share it, I think we have it, right? We have it. Yeah, if you have it, please go ahead and share it. Nairametrics team. It would be nice to see visual.
Yeah. Well, we just need to put up the one page, which is, or I can try. Actually, no.
Recording in progress.
So hold on a second. Let me just mute that other device. Okay. Yeah. So I mean, there are a couple of points that I want to make here. If the team does get it up, they should put up just the one page in the top 10 themes. But let me just start out by talking again something that I think is really critical for Africa and Nigeria, which is a couple of points that I want to make here and themes. But let me just start out by talking. And I'm going to start with the demographics because it's just something that is not discussed enough on that. And I'm going to tell you something that some of you may not know, which is that the number of children outside of Africa is declining in the world. The number of working age adults outside of Africa is declining in the world. Now, this has major implications for the way societies and economies work. And it may be a bit surprising that the number of children and adults, working age adults outside of Africa are declining, because people have an image. They say, well, I understand it's declining in Russia, Japan, Korea, China, France, Italy, Ukraine, except Poland, etc. But I think it's compensated by countries like India, Brazil, Indonesia, Thailand, etc. But that's actually not accurate. So if you look at Brazil, for example, the total fertility rate is 1.7. Of course, replacement's 2.1. If you look at Thailand, total fertility rate's 1.5, replacement's 2.1. Even if you look at India, total fertility rate's 2.1, so just that replacement. So the only place where there's any demographic growth is Africa, and it has a couple of really critical implications. One implication, of course, is that the economic center of gravity is going to rotate very, very fast, as we're seeing. So to put a number on it, for example, there were only 10 million babies born in China last year, and there were 7 million born just in Nigeria, at least according to the official statistics, and there were 40 million born in Africa. The second implication of it is that it is actually impossible for Africa to become prosperous exporting raw materials. So, people have made this point before, but just it's worth reiterating. The mathematics of having such a large population means you can't be prosperous relying on the raw materials, because if raw materials are only 5 or 10% of the value of a finished product, it means you have a very large population only getting 5 or 10% of the value. Now, you can have a country like Norway or even Canada or Saudi Arabia, which have relatively small populations and relatively high amounts of, in this case, oil, and they can be prosperous. But you can't have the entire continent of Africa be prosperous exporting raw materials. And in fact, the only way mathematically you can be prosperous is if Africans trade with Africans, which is why we've been so supportive of the AFCFTA. I think, but the other important point about this is, too often I hear in Nigeria people commenting about, what's the impact of growth rates or GDP or economic developments in the United States, in the UK, and Europe on Nigeria. And I personally think it's completely irrelevant. The future of Nigeria's economy is totally in the hands of Nigerians. And while it's interesting and maybe in some industries important to know what's happening elsewhere, it just takes away our focus when we think it's something that's either going to help the economy or hurt the economy on that. So just a point about that. But what I wanted to just talk through in 5 minutes is just the way we look at the themes shaping the economy, and maybe we'll be adding 1 or 2 themes. And we just make this very simple. As I said, I don't make projections. We don't project GDP. We don't project deficit. We don't project interest rates. We think that's all sort of noise in the system. These are the important things that we think people should be thinking about. So very quickly, we'll start out with unlocking dead assets on there. So sorry, if we could just go to page, a couple of pages further, the page 6 that has the top 10 themes shaping the Nigerian economy. I think this page, it's the only page I'll present. So, what do we think is important from PwC's viewpoint or my viewpoint? One is unlocking dead assets. We wrote the paper about this. Nigeria is a very wealthy country. It has an enormous amount of assets that are not producing a return. Many of those assets, of course, are in real estate. And that's a return both for the individuals who own the assets and can unlock, but it's also a return for the governments. If you look, for example, at Kaduna, they've done a very good job of kind of implementing a property tax system. If states want to solve their IGR problem, they have to be able to unlock real estate. Similarly, of course, we have assets like Ajikota Steel, National Theater, the 3 refineries that are all currently not just dead assets in the sense of producing zero return, they're producing a negative return for the country. So number one theme for us. Second theme, power of the diaspora. I mean, we know in 2019, the diaspora officially sent $25 billion to Nigeria, supports millions and millions of Nigerians. In Edo State, 10% of families are affected by diaspora remittances. It's not something that we oppose. We think we have brain capital in Nigeria. The highest return is the diaspora, and it's shown in India that over decades, having that very strong diaspora is really powerful for the country. And of course, the World Bank said in 2020 it declined to 18 billion. That's actually not true. I think the remittances are going up. It's just, of course, that people use informal systems to be able to do that. So the third thing we like to talk about, though, is related, is if you think of diaspora as the export of Nigerian brains, and we've coined the term, Nigeria's biggest exporter, Nigerian brains, not oil. If the diaspora is the export of Nigerian brains, increasingly Nigeria is exporting brains without people leaving Nigeria. So we're really big on this concept of driving export growth through services. So this is people joining global value chains, coding for employment, business process outsourcing. It's happening at every level in Nigeria, either as a single individual, joining a bank in Europe, getting paid a European salary in euros, all the way up to more organized forms. So companies like Outsource Global, which is a BPO company based in northern Nigeria, started by the amazing Amal Hassan, has over 1,000 seats in northern Nigeria, serving companies outside, earning FX for Nigeria, and good livings for those 1,000 educated northern Nigerians. But it's not just BPO, coding for employment, it's also things like financial services. So we see march across the continent, Access Bank, GT Bank, UBA, Flutterwave. Flutterwave, you may argue, is American now, but it was started here, InterSwitch, et cetera. So we really view that. And of course, we also have the cultural industries. I don't know if you saw the Nigerian song hit the number 2 in the charts yesterday in the UK. My wife was listening to it. He re-sang it in English. I took out the Yoruba and some of the Pidgin, but just incredible cultural industry. So we would really like to see the country focus on exporting services. And partially one of the reasons for that is because our infrastructure is not very good, hard to get through the ports, complicated. So the idea that we're going to export physical goods easily out of the country is just, it's not accurate for 5 or 10 years, but we are exporting the services, and we'd like to see doubling down on that. Growth across the country, I'm very encouraged by what I've seen in the last 5 or 6 years, just the states taking ownership of their own economic destiny. My wife was actually on a call this morning with something she's doing in Edo State. Incredible to see what they've done, but Kaduna, Ekiti State, Ogun State, Lagos, of course, Nasarawa, are some of the states where I've seen amazing things happening, and the governor is moving forward, and we need this across the country. Fifth theme we talk about is, despite some positive news, we're still not getting enough investment in the country. So we need to invest about 27 to 29% of our GDP annually to get 6 to 8% growth. Just mathematically, that's kind of about the level of India. We're only investing about 18 or 19% of GDP reinvesting in the economy. So it's an urgent question particularly for the federal government. This is the biggest economic opportunity on the planet. Why are people not investing? Why are Nigerians not investing? Why is the diaspora not investing? And why are groups outside of those two not investing? Sixth theme that's really important, I think, for the country is just getting this movement from the informal to the formal sector. So over 50% of our economy is informal. There's nothing wrong with that. It's better than no economy. And there's lots of pockets of economic activity not captured by our statistical processes. But the problem with the informal sector is the productivity is low, investment is low, because by definition, it's hard to invest significant amounts of capital when it's informal. So how do we entice people to move, because it's a choice to move from the informal to the formal sector? I think the good news about this is it's now really recognized by the government, and the Honorable Minister of Finance, Budget and National Planning has done a really good job of incorporating this in the Finance Act on that. So it is on the radar. Improving the business environment. I mean, I think PEBEC, Dr. Jamoke, supported by His Excellency Professor Osinbajo, Vice President, have done an amazing job. I was at the 5th anniversary celebration about 5 weeks ago in Abuja. I mean, it's just amazing, but there is a lot more work to do. I guess the way I look at it, and I think His Excellency the Vice President expresses the same way, there's lots of positive news, but there's still forces of evil opposing the business environment improvements. But the thing that's really different for me in the last 5 or 6 years is everyone understands it. Everyone uses the language. His Excellency the President uses the language, the Vice President, the governors, and I think we've made real progress, though we're not there. The eighth theme that we're thinking about are the 3 big distortions. So this is the oil subsidy, the currency, and the electricity. I mean, all 3 are going through such turbulence right now, particularly the oil subsidy. I mean, of course, we have a situation, oil's now reached $90 US dollars a barrel. You think the country would be doing better under that circumstance, and presumably it's got to flow through, but we're having some trouble on the production side. But the latest number to come in the headlines for those who read it yesterday is the subsidy will take 3 trillion Naira a year, which is extraordinary. Now, we have been among the advocates to say it's highly inefficient, it's prone to corruption, diversion, and we would like to see it go. We understand it's highly political. We had announced it would come to an end this half year. Now it seems it's going to be extended. Very difficult, but we're in the death throes of this issue. It has to come to an end. Similarly, on the currency, we're not having as much public discussion right now, but you go back to my question about low investment. One of the primary reasons people outside the country don't invest is confusion about the currency situation, on that, the need for unified exchange rate. We've advocated for that primarily. We understand the concept that the government wants to put its scarce resources, FX resources, against things they deem most important. But the consequence of that is we're not getting enough investment, and we need the private sector investment on that. Ninth theme that I think is really positive for the country is what we call the shift from the GDP lens to the SDG lens. So, I grew up trained as an economist, where we're obsessed with GDP. I think the country is actually ahead of much of the rest of the world in terms of understanding that GDP doesn't necessarily translate into well-being, and that what really captures well-being for our circumstances is the SDG lens, and that's the language people use. So, I mean, again, that's encouraging. And then the 10th theme I'll just put on there is, we can't get away from the issue of climate change. We're not immune to it. I mean, Lagos, the big parts of it, we have a situation where it's predicted to be the largest population country by 2100 at 88 million. I don't believe that will happen. But definitely won't happen if we continue to have the climate situation that we have, because large parts of it will be underwater. So maybe Ogun State will be 88 million, but we're all aware of challenges with more extreme weather and flooding around the country. We're all aware of challenges that come from the Sahara moving south, so creating conflicts that we're not, that are being exacerbated now. So we can't avoid it. So, and let me just finish by kind of raising, one other issue here I think that's really critical is, and of course, Nairametrics and UGO are in the same situation as us. I mean, we at PwC, we have to repeat official statistics because of the official statistics. And I think that Dr. Calais, who of course is retired from the NBS, was one of the great civil servants of the time for the country, did a fantastic job. Dr. Harry has replaced him as Statistician General. But at a very fundamental level, we are very skeptical of the official statistics. The economy is bigger than we say. There are pockets of activity that are not captured. We're going to have a rebasing. So to base policies on the official statistics, in our view, is a grave error. In fact, we would really like to see the country be at the forefront of having a new way of gathering what's actually happening, using real-time data, GPS data, mobility data out of cell phones, et cetera. And we think that's a big area for growth. And maybe, as I said, we can be in the forefront of it. And we're going to have that rebasing. It's going to show the economy, in my view, is 20 to 25% bigger than it actually is on that. But we need a better way of gathering statistics. And I'll just end today by just putting one issue on the table. I do think the time has come for us to have an honest conversation about the real population of Nigeria. I do know of groups that are kind of working using geospatial data to actually get a more accurate view of this. My personal view, I won't ascribe it to PwC, is the population is probably 170 million. It's probably a good thing for the country that it's not as high as we think. I think the official number, if you look at the Worldometer for now, is 213. It may have taken 214 million on that. But we've gone long enough by not having that honest conversation. So I'll put that on the table. Something quite controversial. I retire soon. I could only be deported, but I do think the country would benefit from that. So those are some of the things that are on our mind. As I said, we don't make predictions about the future. But I'll finish in saying I have never been more optimistic about Nigeria than I am today in the 13 years I've been here. And the reasons, I see many pockets of very positive things, but I also see all of the negative issues that we understand. And I don't even discuss the negative issues, but they're known, they're understood. People know that these challenges need to be taken on. And I see people try to take on those challenges every single day. So this morning, some of you may have heard of Madame Obi's School for Policy, Politics, and Governance, which is trying to train a new class of political leaders for the 6,000 political leaders for the country. Fantastic initiative. I'm a volunteer faculty member. Ugo maybe as well. They're having their first graduation of the first class today. Just absolutely inspiring. So despite all the challenges, people are stepping up to solve them. I see so many positives. So I know we're in a difficult situation, but me as an outsider to this, I'm very optimistic. So let me stop there and turn it back to Ugo. I hope this has been helpful to kind of frame some of the issues for our discussion today.
All right, thank you so much, Andrew. Really appreciate the presentation, apt as usual, and thanks so much as well. Femi, a lot of people liked your presentation as well. I don't know whether they liked the fact that you're telling us that the government is going to tax us more, or whether they just like the aesthetics of your presentation. I'm not really sure, but we'll find out.
No, there is a good way to tell someone, go to hell, and the person is looking forward to it excitedly. So I think it's more about the delivery.
All right. So guys, we're pretty tight on time now. So we're just going to dive straight into the panel discussion. The first part looks at domestic macroeconomic issues and of course, investment opportunities, which a lot of our participants here want to know. Femi, I'm going to come to you first. And this is off the back of your presentation. There's something you mentioned that kind of caught my attention. You did talk about new powers to collect tax, and you expect actions from the government. And I guess, by new powers, perhaps we are referring to, powers backed by law and technology as well. Could you maybe help our participant explain what that means for them? When you say, the tax authorities now have new powers and, can now act, differently than they've done before. What does that mean? What does that mean for us?
Okay, thank you. There are two things here. So first is, under the Finance Act, the powers of the FRS has been expanded in terms of the revenue collection drive or the coverage. So they have responsibility for not just the corporate tax, VAT, and all the other stuff. I think the way it's been structured now or worded is all revenues are accruable to the federal government and maybe to the federation accounts as well. I mean, they'll have conflicts with some agencies eventually, but at least that is the focus, to try and empower the FRS to do more. But I think the bigger one is the powers given to them to be able to deploy technology, their proprietary technology or software, to companies and extract data directly from whatever you use. There is a penalty now for failure to comply with any directive the tax authorities make in that regard. What it means is, for companies that have softwares like or standard ERPs like SAP and the likes, you may be required now to allow the FRS attach some technology software that would enable them take transaction data on a real-time basis from your software, which means they are going to a proactive audit. Yeah, so the audit will no longer be after the fact. They will have access to information even before your filings. And that's what we've seen in many other jurisdictions. So it's something that is coming to Nigeria. They've started actually last year. They started with the retail sector. As at the end of last year, we're looking at the shipping and airline. So it's coming to many other sectors. It's come to the consumer sector. The oil and gas is definitely going to be a target eventually. So that means that companies have to proactively plan. If you currently use Excel, there may be a need for you to reevaluate that in keeping your books, because once a demand is made, if you do not comply eventually, there are penalties. So there's going to be a lot more activity from the tax authority trying to move from a reactive compliance to a proactive compliance stance.
All right, guys, you heard it here first. One of the first nuggets, first outlook to expect this year, government is going to be plugging into your applications, your software applications. You're looking at a lot more proactive audits rather than reactive audits. Interesting times we have here. Femi, I'm going to come to you in a bit, but let me go to Andrew now. Andrew, I see a lot of the stuff that the government is speaking to, particularly when it comes to taxes. And everything seems digital inclined. Do you think that Nigeria, as it is today, is ready for digital tax? Is this something that the government should be encouraging? Shouldn't we be looking in a direction of trying to support a lot of the younger Nigerians and small businesses and startups who are just basically trying to get their businesses going in an economy that is increasingly difficult to operate in? Is this what the government should be doing? Should we be encouraging that right now, Andrew?
Well, I think the digitization of the tax system is the right direction. But I think the question you're asking is, should we be increasing taxes at the present time? And I think our view has been pretty clear, which is, in fact, Taiwo says this to begin with. I mean, 6 or 7 taxes account for 98% of the federal government's revenue. So, in fact, the official view of PwC, of Taiwo, which is the official view, is that we should just eliminate every other tax. I mean, the taxes create complexity. They create means for diversion, confusion, and makes it more difficult to operate the businesses. And of course, we're all aware of the multiplicity of taxes, and you have also some non-state actors involved in this that you're not quite clear their status in collecting taxes. So really complicated, particularly for the MSME sector. So I think there you're exactly right. I think the point that we've made from the economic side is very difficult to raise taxes when you're not growing. So we've had growth rates, headline GDP growth rates below population, which means per capita we're getting poorer and poorer for the last 7 or 8 years. And in that environment, trying to raise taxes is very problematic. So what we've encouraged, or I've encouraged for the economic side of PwC, is what the government should be focused on is, if they want to grow the tax revenue, the economy has to grow. So if you've taken it, people know I lived in China for 10 years. When I lived there, the economy was growing 8-9%. The tax revenue was growing 15-18% a year. No one was complaining, because if your business is doing well, and then of course one of the reasons the tax revenue is growing is more people joining the formal economy because they see the advantages of it. So I think they're making an error and trying to take more out of the economy when it's not growing. If they focused on getting the economy to grow 6 or 8% a year, or as the governor of the central bank says, 10% a year, fine, you can take more out. So that's a source of real tension right now.
All right, thank you so much, Andrew. Adetunwa, I'm going to come to you in a bit, but let me touch on Femi, because there's something else I want to ask Femi. Femi, you did mention restructuring. So, basically, because of some of this new tax, empowerment, or this tax initiatives that the FIRS can now do, businesses now need to restructure their operations. So you said, if I was using Excel for keeping my books, I have to move into something else. So what does that mean for small businesses? Isn't that extra cost, additional cost? What if I can't afford an accounting software? What if it's Excel that I can use? What if I still keep my books manually and I can't afford to move beyond that? And am I going to be compelled, to acquire that software?
Okay, thanks, Ugo. And just to also then clarify that from the last Finance Act, we had introduced exemptions for businesses that earn, for small businesses, and I think those are businesses that earn less than less than 100 million naira a year. Yeah. So if for small businesses that fall within that category, you may not necessarily have a lot of those enforcement actions. So the target would be for medium to large scale companies. And those companies expectedly, I mean, if you're a company doing more than 100 million naira in revenue annually, the expectation is you should not also use Excel to keep your books. You should have a software, no matter how small it is, to manage your own processes better. So it's not, the initiative will not be targeted at the small companies. In fact, the target now is to start with the big boys, and then from there, maybe cascade it a bit down once we see the successes that are then achieved. But just to corroborate what Andrea said, the focus really, and if you look at my presentation, I made reference to expanding the tax base, because I think the government also recognizes that in increasing the revenue for government, you can't continue to increase taxes. Otherwise, it's just like they say, it's like when you put, when you send the bucket into the well and it has an open bottom, it will get to a point you will stop drawing things out. So the government is trying to expand the tax base as well. One good initiative that I think would help this is actually the taxation of the digital economy that has presently, or that hasn't been taxed previously. So we're going to get a lot more tax from Netflix, from Twitter, and all of that. So it's expanding the base, and I think that is the correct focus that the government has, and that's part of their strategy for this year.
So Femi, when you say Netflix, Twitter, and YouTube, and Gmail, and Microsoft, so is the government going to be focusing on those third-party companies, or those companies that are not Nigerian but have footprints across the globe, or are they also going to be focusing on their local competitors? What exactly is going to be driving this for the government? How? Okay. Yeah, go ahead.
Okay, so in terms of the deployment of technology, obviously it can only be to Nigerian companies. You won't have access to the software used by Twitter globally and all of that. So the deployment of technology is mainly to companies incorporated in Nigeria, because it has to be, the way it is now, it has to be an on-site attachment. So it's not a cloud-based stuff. So that is number one. But in terms of the target for expanding the tax base, target really, like I said, will be for the global players. So we for now are looking at the big digital players. The way it is now is Uber, Uber, for example, is already complying with filing returns in Nigeria, or it intends to comply with filing returns in Nigeria, will pay tax in Nigeria. You have Netflix has already notified its customers in Nigeria that they will start, including a 7.5% VAT. So the target for improving and expanding the base is those guys. But for technology adoption and the deployment, because of the on-site attachment of it, has to apply to Nigerian businesses.
All right, thank you so much, Femi, for that. Guys, you heard it. So a lot of those taxes apply to companies that have an annual turnover of 100 million and above. So if you're below that, you probably don't need to or worry too much. Adeton, I'm coming to you next.
Ugo, yeah. Let me also clarify that. So the 100 million and above exemption is for the FRSI. So that's for your corporate taxes. Okay. But for individuals, so if you're an individual that is not a company and you're running a business, you are an enterprise, like maybe you have a shop somewhere that is not a limited liability company. You are not under the purview of the Federal Tax Authority. You're under the purview of the state. So you are still going to need to pay your personal income tax. There's no exemption for you there. But you'll be exempted from VAT, which is a federal, you will not have an obligation to register and charge, but the beneficiary would also then require to pay. But from the personal income tax, because you are an individual, if you are an individual running your business and you earn less than 100 million, your state tax authority would still be able to collect taxes from you, corporate taxes, income taxes from you.
All right, thanks for that clarification, Femi. Please, if you do have questions, drop it on the Q&A portal, not the chat, Q&A, so that the Nairametrics team can pick them from there. Adeton, just going to come to you now. From an investment perspective, Femi did also touch on some taxes on the emanating from the Finance Act 2021. I think if I recall, Femi, correct me if I'm wrong. The government is now going to be taxing capital gains on sale of shares or investment securities. I think if it's above 100 million or thereabouts, I hope I'm not mistaken. Deton, from your perspective, is this a right move, and does this impact inflow of investments into the country?
Yes, it does. In terms of, taxation means you're reducing my income, and when I'm coming, the major hindrance to flow of investment is not just the tax. That's taking effect from 2022. The major hindrance is the FX policy. Like I think it was it Femi or Nevin that said it in his presentation. When you have multiple exchange rates, bringing in inflow into Nigeria is kind of confusing because you're not sure which market it is you're coming. When you have capital controls, that's a major hindrance to investment. So in terms of taxation, that's an issue because you have to look at the effective return on your investment and see if it is worth your while. So you consider the tax. If you're looking at an emerging market like Nigeria, you look at Nigeria, you compare it to an Egypt, you compare it to an Angola, you compare it to similar economies in Africa, and then you do your math and find which one gives you the highest rate of return. So taxation is just more or less. Now, another component that I'm not sure Femi forgot to mention is that from 2022, the tax exempt status on T-bills and corporate bonds have been lifted. So that means there's an now that's an additional tax, right? It's not just the capital. You have to start paying prior to now, 10 years prior to now, those were tax exempt. So that's some of the things you have to consider in terms of making an investment, whether you are a local player or an international player, because now your effective return is reduced by the amount of capital tax you pay on those securities.
All right, thanks so much, Adito. Just a follow up to you as well. So for our participants here who perhaps are looking at their investment plans for 2022, are there tax implications for anyone who has a portfolio that's below 100 million, in Nigeria, whether they want to invest in equities or fixed income securities, or what should they be looking at?
I think what they should need to worry about actually are the transaction charges, not really the tax. Because like Femi said, if you are below 100 million, all you need to do, you pay the normal, for example, if you invest in equities, you pay the normal charges, SEC charges and all that. There's a new introduction in terms for investing in fixed income, FGN bonds this year. Now there's a transaction charge that has been introduced by SEC. So you need to worry about that. I think it's 0.002% of the face value of the value of your investment. So yes, you do need to worry about that. In terms of what you can invest in that are tax exempt, probably mutual funds. For now, mutual funds are still tax exempt. They are the only other asset class that I can speak to top of my head that don't have any tax implication as at now.
All right, thank you. So there you have it, guys. Rather than worry too much about taxes, even though you're going to have increased taxes, worry more about charges. There are new charges that are coming in if you're investing locally. But of course, mutual funds remain tax exempt. Liberals, I'm going to come to you in a bit, but let me go to Faye right away. Faye,
sorry.
I hope you're here with me.
Ugo?
Yes.
Sorry,
Penny, you want to say?
Yes, can I just clarify one of the points made by Adito? And that is to the fact that the exemptions of any capital gain you make on disposal of things like treasury bills and all of that will still from securities, from government securities, is still exempt capital gains. What has been taken off now is the interest, because I think it was under Jonathan where there was an exemption that was introduced for interest and some of the incomes from some of this.
That was Okojera.
Exactly. Yeah. So that 10-year period has now elapsed. So that is for corporate tax. But the exemptions, the capital gains exemptions still exist. So
okay, so
that's the point too.
so what has expired now is the interest element of your fixed income security.
Yes,
is that correct?
Yes, especially from things like your treasury bills and all of that. Yes. So that exemption that was available, sorry, from bonds and stuff, that exemption that was available as, pardon?
Corporate bonds and T-bills.
Yes, sorry, corporate bonds, yes.
Okay. All right, fantastic. Thank you guys so much for this clarification. I'm sure we already hit 400 participants already. Everybody wants to get in on what's going on, what you expect in the Nigerian economy for 2022. Feyi, when you see government imposing taxes and coming up, there's really something driving it. There's got to be a driver somewhere. Government doesn't just wake up and start to come up with all sorts of tax initiatives or all sorts of initiatives that would increase taxes or give them more access to people that they can tax. And one of those things that we look at, Feyi, is government's rising deficit, right? So I think in 2022, we're looking at 6.39 trillion in deficits for 2022. And if I recall, we've been running a deficit every year for the last decade, So what's the implication of this, deficit that we're running tax-wise? Make a link for a lot of our, our participants here. How is, increasing government deficit playing a major role on the type of taxes that we're seeing? Because it appears the government is very creative at increasing taxes, right, than actually solving the deficit problem. And of course, also give us a link as well to Nigeria's rising debt situation, which is also one of the reasons why we're seeing a lot of tax increases. Feyi, please go ahead.
Yeah, thanks, Ugo. I think, one of the things that we probably don't talk about enough is the fact that, taxes are a lot about behavior. Generally, you find people behave almost in the same way with taxes. And the behavior is not just from the taxpayer, it's also from the government. So, you see certain behaviors in terms, and this is almost not unique to Nigeria. I think there was an analysis a few years ago whereby somebody did an analysis of how taxes are collected in sub-Saharan Africa, and the pattern is the same. If anything gets big or it is visible, it gets more taxes, regardless of whether or not it's not driven by it's not really driven by economic decisions per se. If something is big and visible, it's going to get taxes. And one of the best examples of this is, telecoms. Telecoms are taxed heavily across sub-Saharan Africa. It's not just Nigeria, when you look at the pattern everywhere, because a telecom company has masts, they have offices, they have phones, so governments will always target those kind. And I've seen, another pattern of that now. For example, I don't know, if you have a paid Zoom, I've been seeing people saying that a tax has now started coming through for people who have paid Zoom in Nigeria. They've reported, a couple of people have said they've now started seeing taxes come through. Here we are, the pandemic came. It was not something that the Nigerian government had anything to do with. As a result of the pandemic, the video conferencing blew up. Again, it was not that the Nigerian government invented teleconferencing. They did not invest in teleconference or anything. All of a sudden now, because it has blown up, it has changed the way people work, the government arrives, and this is what my friend calls the area boy theory of tax. There's a problem somewhere, right? The area boy sits down, it doesn't do anything, right? Somebody now decides that, oh, okay, we have a water problem here. Maybe let's solve it. The moment they start solving it, the area boy arrives to collect the tax out of it. All of these taxes, I'm a bit worried about them, to be honest. I don't think, I wish we had a more robust elite that could push back on some of these things. Of all the taxes, the only one I would probably say I agree with is the removal of the bond exemption, because personally, I thought that was a bit of a nonsense when it was actually, implemented under Jonathan back then. It was just basically a gift to large financial institutions, and for the others, well, I don't know, capital gains tax, will somebody do a big spreadsheet, say, I'm going to put 1 billion in Nigeria, but because of this capital gains tax, most investors don't really think that way. People, they think about all of this upfront. But anyway, to put this all together, what is driving all of this? It's not as if the government is actually looking for money for investment. I mean, if we're being honest with ourselves, they're not looking for funds to say, oh, we want funding to build roads or all that. The government is chasing its tail. We have a serious spending problem in the sense that even if you double government revenues today, pretty much that doubling has already been spent. We are running some incredible, unbelievable deficits, right? The deficits, they don't make sense because of the way the government tries to arrange the figures in the budget. So you have some really ridiculous deficit whereby we are constantly chasing our tail. So that's what's driving all of this. And then, when you tie that all back in together to the fact that taxation is driven by behavior. How does the government behave? Who are they taxing? Are they really taxing something because, maybe there's a lot of economic activity there, or they are taxing what is visible? If people, the message starts to get ingrained that if you get big or if you rise above a certain level, the government is going to come after you. You encourage people to hide economic activity. It's just a reality. I mean, we cannot deny this. If people see that, if you get big to a certain level or something, or you're making a certain amount of money, then they're going to find ways to try and hide what they are doing. So, I mean, I guess it's not easy for me to say, we need to have a conversation about how we do taxes. Life will have to go on. The government is desperate. They have serious bills to pay. They have borrowed so much money, debt servicing. We are also staring down the barrel of the end of oil. I keep saying this every time. The maximum I'll give oil for Nigeria is 2040. We are staring down the barrel of it. We're already at the point whereby we cannot really say we are an oil economy anymore. As things stand right now, what can oil do for Nigeria? It can't do much. It can't do anything. It can't pay salaries. It can't fund infrastructure. It can't do anything big for us as a country anymore. And, and we also make things worse for ourselves, whereby, unbelievably, we're now in a situation whereby oil goes up, it's a problem for us. Oil goes down, it's a problem for us. How we have managed to lock ourselves in this kind of really bad incentives and bad situation is really, it's incredible and quite sad. If all go, first of all, we're producing maybe about 1.3 million barrels a day now. We can't even increase production. If the price goes up, subsidy goes up, and it slams. I mean, when you look at some of the subsidy deductions that are going through the federal allocation right now, it's eye-watering. States are crying. I mean, you are looking at before anything comes to fact where they allocate the money, somebody has already knocked off 300 billion from source. You can't do anything about it. The money has already gone, from subsidy. You cannot share that 300 billion for that month. And there are states in Nigeria whereby even an additional 1 billion a month will do, it will give them so much breathing room. So we have locked ourselves in that position whereby $90 per barrel, in fact, maybe we don't even want oil prices to go up anymore. As things stand now. And if oil prices drop, then what do we do? Is anybody incentivized to increase production? And we need that increase in production to happen. So I think we've locked ourselves in a really bad place as a country. The good thing for me is that the government is not the only thing happening in Nigeria. So if you can close your eyes to the government just for a few minutes, you see a lot of good stuff happening. Nigerians are resilient, sometimes too resilient, and that one is a problem on its own. Sometimes it's better for them to just punch back or shout, rather than just taking all the blows. But there's a lot of there's good stuff happening outside of government. Where the challenge will be that when government collides with all of these things, if somebody grows big, what is the risk to them in terms of in terms of government? What kind of crazy policies can come? I was saying something a few days ago about CBN now trying to bring in price controls, which you think that some of these ideas have expired, but you know, I mean, CBN is coming up with a new way whereby, again, that is going to encourage all kinds of fraudulent behavior, all kinds of dodgy behavior, whereby people will now find a way to hide the cost of what they are doing. You know, again, all of these are risks to the economy. So I think, you know, to wrap up your question, tax is driven by behavior, and the Nigerian government has a kind of behavior which is not always good for the economy, and the people respond well with their own behaviors. I mean, to close, there's the proverb that Chinese people say that I like, or a popular saying in China. You know, whenever the government tries to go, they say, from above there are measures, from below there are countermeasures. So if the government comes at us from the top, we, the people, will go back to them from the ground up, and, you know, they neutralize themselves. And the Chinese people have an unlimited array of countermeasures in which they use to counter government whenever the government comes up with all kinds of credit. So I think we're going to see some interesting countermeasures from Nigerians with all these taxes coming. I don't think people are just going to sit down and just soak in all the taxes. So it will be interesting to see how all of this works, and what amount of respite or relief the government can even get from all of their from all the taxes that they think they are collecting, because their spending continues to increase. Whether the taxes can plug that, we're going to see.
All right, thank you so much for that, Feyi. I mean, Feyi always speaks out of his heart. Passionate response there. You know, for you guys, you see why government is increasing taxes, not necessarily because they're looking at increasing investments or attracting investment in the country. It's just, you know, that hole that we keep creating for ourselves. Something has got to fill that hole. Liberos, I'm going to come to you next, sir. For a lot of the participants here, small businesses, big businesses, medium-scale businesses, corporations, one thing that they keep asking is, who do we now face? You have a federal government, you have a state government, you have local governments, everybody coming at you for taxes. So who are you? Who do we pay VAT to this year? Is it likely that we're going to be paying VAT to the state government based on, you know, the court case that is ongoing now, or is it likely that we're going to be paying taxes to the federal government? Where do you see what sort of, you know, what do you see playing this year between, you know, different kind of tax collectors we'll have in Nigeria, whether it's federal, state, or local government, for an ordinary businessman or any business corporation in the country? Liberos. We can't hear you.
Hello, okay, can you hear me?
Yes, much better. We heard you now, and then you went mute for a bit.
First and foremost, the last speaker talked about the fact that you're looking for fully might go to challenge.
Bros, I think your mic is coming in and out. You want to exit your yeah. Okay, go ahead.
Okay. So
the mic is still bad.
Maybe you want. Let me rephrase the question so that I.
All right. So the question basically is what should businesses look out for this year? Because you have local and federal government authorities, federal, state, and local government authorities coming at you for taxes. And then you also have taxes that seem to cut across federal and state and local governments. So what should we expect this year? Is there going to be, are we going to see more of the same, where you have people coming, you know, for the same taxes, which is multiple taxes, and then VAT as well? Who are we going to pay VAT to? Is it going to be the state government, or is it going to be the federal government? At least based on the court case that's going to ensue between the state and federal. Liberals.
Yeah, let me start from the fact that we under demand from government. There's always this tendency for us to look at ourselves individually. We're very resilient. So because we're on that demand, you'll find the structure of government is determined by people who are in government, not the policies itself. Somebody can just sit down and wake up and remember there's a policy somewhere to implement. Or, oh, look, we need to change this without actual consultation because the rest of us do not demand. And that's why our criminal justice system, including our court system, we say the windmill of justice grinds slowly but surely, but we forget that justice delayed, justice denied. I'm trying to lay a foundation here so that people can understand. So when these things happen, ordinarily, you find out that in most businesses in Nigeria, there's always, in most commercial agreements, there's always these arbitration clauses. And even the arbitration clauses now, it is so bad that most of the arbitration, if the international organizations have their way, they will tell you the arbitration should be in London. Because there are no easy ways to determine disputes in Nigeria, especially disputes that have to do with state and federal government. Take, for example, the VAT issue. One would have expected that being a very important and challenging issue, that the Court of Appeal would have dealt with it in 1 week, like it used to happen in the First Republic. But unfortunately, it's dragging on. We're still at the Court of Appeal level, and then eventually we'll get to Supreme Court. So these are some of the challenges that the businesses will have to contend with. Remember when the High Court the Federal High Court in Rivers State delivered the judgment, Odili almost insisted that it was going to, implement. The governor of Rivers State insisted that it was going to implement that decision, whether anybody likes it or not. And unfortunately, at the end of the day, he was prevailed upon to allow Wise Council the federal government having appeal. So, businesses in Nigeria are going to consistently continue to oscillate between should I pay to the state government or should I pay to the federal government. So, and that's why for me the issue is let's consistently increase our participation in accountability from government, from everybody in government. As a businessman, you should understand that government decision, one single decision, policies from government can entirely collapse the business. And so, when this issue of VAT, for example, and taxes comes up, it is not enough for us to sit down and debate. We're talking about the tax laws. How much input do we even have in these laws? How much do we, Nigerians, as a people, how do we follow this trajectory? How do we ensure that, even including our business owners, do we ensure that some of these laws, including members representing us, that we participate in debates, in stakeholders meetings to make input in taxes? Just the same way you hear debates on electoral reforms back and forth. How much input do we, as business owners, as Nigerians, contribute to this debate? So that's where it's a big challenge. It's a quagmire, and I wish I could answer your question now to say that, look, at the end of the day, the matter will be resolved in favor of the state or in favor of the government. Because there are two issues. There are two big challenges. If you resolve it in favor of the state would collect VAT, but they'll be limited in collection of VAT. The resources that will be accruable to most of the states will be limited because there are some areas, for example, that the states cannot collect VAT on, except the federal government. And so when you now say VAT, the power to collect VAT is only residual, in the state government. Because mind you, it is not in the exclusive legislative, neither is it in the concurrent legislative. So the presumption is that it's a residual item. And that residual item is strictly the local government and then, managed by the state. So if you do it that way, you also limit the capacity of the state to expand VAT on services like, internet services such as these that we are discussing today. And then so, how about cross-state transactions? What happens? For some states also that, take for example, telecom transactions. Some states definitely will get much more than others. So I think that they need to find a political solution for the sake of businesses in Nigeria. And still that brings me back to the people, business owners and the average ordinary Nigerians. contributing to ensure that they make more demands from government. Because if you make less demand, government become like a dust. But when you make more demands, our voices are not high enough. If our voices are high enough on what should be, and then government will find a political solution to this issue, because the legal solution cannot solve it. Because the court will interpret one way or the other, according to what's in the books. But that end all of this crisis? Will that give states more money? Definitely, yes, it will give them a few money, but the chunk of the money will be lost to the federal government. And we are consistently said in Nigeria that the federal government is a behemoth. It's too big. We need to unbundle Nigeria as it is so that our states and local government can become viable. And then, mind you, all business is local. I use that word as advisedly because for every business, your target is the end consumer, which is the ordinary people that would, ensure that the business is running. But a situation where you are not certain as to taxes, should I pay to federal government, should I pay to state government, or should I pay to local government, it becomes difficult for business or people to come do business with you. And then also, even the existing business, it becomes very easy for them to want to cut corners. And the moment business start cutting corners, you know what happens in Nigeria. Also, that will it mean less money for government activities. So, like I said, what we need to do, my advocacy consistently has always been people's participation. Let's learn to know our rights more. When we know more of our rights and demand more of them, then government will, it's not every government decisions that we want to, the court system to find solutions.
All right, thank you so much, Liberos. Adito, I'm going to come to you next. We're going to gravitate away from taxes, but just not after I ask Liberos one last question. Liberos, so do you think that the issue between the government, the federal government and the state government will be resolved this year, specifically the VAT? Do you think it will be resolved this year?
I doubt it to be resolved this year, if it will be resolved this year. Because if at this stage, we're still at the Court of Appeal stage, we have not resolved the issue, it is not an election matter, because it is only election, pre-election and post-election matters that are time-bound in Nigeria, where the Supreme Court will have to give decisions within a time limit. And so you find out that other matters that are either at the Court of Appeal or at the Supreme Court consistently will take the back seat. And so pre-election matters will be given precedence. And then secondly, we are in pre-election year or electioneering year. So everything in Nigeria, including decisions, government decisions, judicial decisions, will take the back seat because the rest of us are not demanding enough. And so that matter will take the back seats while they will go about their elections, conclude the electioneering, and maybe upon handing over, or immediately after handing over May 29th, 2023, that's when the issue of VAT will resonate again. You have new set of governors that will want, to quickly debate the matter and want accelerated hearing. And that's why, for me, I think that they should sit down at FAC. It's a matter that they meet every week. They should sit down and FAC and find a resolution to it. And then possibly, just the same way we are doing with the electoral amendment, sit down with the principal members of the National Assembly, and then just amend a few sections of the law, and then we're good to go.
All right, thank you so much. Very important to ask that question because we want to know who we're going to be paying VAT to this year. Femi, I see your hand raised. You want to contribute one last on taxes before we move to other macroeconomic issues? Femi?
Yes.
Liberos, you have to mute.
Yes, well, thanks. So two things. The first one to add to what the comments made by Liborius about the fact that this issue is more political than fiscal. So you have to look for a political solution to it. If we continue to fight this matter in court, you are likely, even the courts will be very careful in concluding the matter in a manner that may affect how courts are funded eventually. You know, right now courts are still not independently funded yet. So all of that will still be evaluated a bit more. So it's important that the governors, the president, everybody sits down together and find a political solution. So it's very similar to, yes, it's very similar to the issue around state policing. You know, it's something that we know is good for the federation, but it's something that has to be settled politically. The second point I wanted to make before we move away from tax was to clarify something I said earlier in terms of the scope for small companies. I had made reference to 100 million. It's actually 25 million. So small companies are companies that earn 25 million and below, not 100 million. 100 million and below is for medium companies. So companies that won't be bothered with tax issues are companies that earn 25 million and below by the FRS. But your state governors, depending on if you are an individual, you still need to pay your personal income tax to your state.
All right, thank you so much for that, Femi, for that clarification and for weighing in on these VAT issues. Political situation, but for us businesses, let them just resolve it. We don't want confusion this year, especially when it comes to VAT. So we've basically dealt with taxes. If there are other questions, please put it in the chat. We would also get our participants to respond to those questions directly in the chat if we can't take them here. So we're going to move straight, Aditon. I'm coming to you next, and I want us to discuss inflation. Inflation is also one of those big sticky issues that we've been on for the last 2, 3, 4, 5 years in this country. Now, what we're seeing now is inflation across the globe, not just Nigeria anymore. So this is no longer a Nigeria issue. You're seeing inflation in the US, you're seeing it rise in Europe as well and in the UK. And these things do have effects on us here in Nigeria. So from your point of view, what is your outlook for inflation in Nigeria? And what do you think small businesses should be doing, to sort of mitigate that negative effect of inflation? 2 questions in one.
Do you want the political answer or do you want the reality? The
reality.
answer, according to the CBN, is that inflation is transitory because, there's been a decline and then it came back up in December, and it's because of supply push food. By the time the supply goes back up, inflation will taper down towards Q1. But the reality is, based on let's even take the discussions that we've had this morning on taxation, all that tax will filter back into consumers, right? Into cost of goods and services. So we are not immune from what's going on globally. That's another thing that the official sources say, that we are immune because we are not, that the inflation in global economy will not wash down to us because through exchange rate and all that. But we are an import-dependent economy. Everything that we consume in Nigeria is imported in one way or the other. So don't let's talk about the increased taxation drive by the federal government and the states, because Lagos states last week introduced taxation on the National Union of Road Transport Workers. The implication meaning that transportation costs will go up. Now, that will filter down in cost of goods and services and doing business. The government is saying they will start taxing, they want to start taxing people that do businesses on Twitter and Instagram and all that. It will filter down into the consumer. Yes, given that the basket of goods that track inflation are mainly local, you look at 50% of that, it's food inflation. But there is also the input into production of those things. So we talk about oil prices. Somebody mentioned that it's a catch-22 for Nigeria. We should be happy oil prices are going up, but because we're paying subsidy, the gains are being eroded. But then it means that the cost of doing businesses are going to go up, because when oil prices go up, you are in manufacturing, you are going to use diesel, right? You don't have subsidy on diesel. So all those things, you talk about the sweet tax. So inflation will definitely go up. And another thing that we need to talk about is, we mentioned electioneering year. there's a lot of cash that goes on. We know that's an African thing. When there's an election year, there's a lot of cash that goes on. All that will fuel inflation because that money has to find somewhere to go to. So yes, definitely inflation will definitely go up. In terms of what are you going to do, investment opportunities, tough question. But what I will say is, I presume many of our audience are young people. They are not as risk averse as a demographic. And Andrew had mentioned the population demographic growth in Africa and the fact that Africa is growing. The beautiful thing about Africa growing is that we have a lot of young and virile population that are willing to take risks. So you see them investing in very risky outlets, asset classes. Some of them are doing crypto, some of them are doing all sorts of stuff. So those are the things that are more or less not tied to inflation. But if you're going to do the traditional fixed income treasury bills, you will have a negative return because those returns will not give you a hedge against inflation. But I believe that the proliferation of fintechs also brings innovation into the market. So we're probably going to see a lot of innovative products coming up throughout the year that people can invest in that will definitely give them a hedge against inflation.
All right, thank you so much for that, Adito. Andrew, I'm going to come to you next. This appears to be a challenge. Inflation is something that's disturbing everyone. So, I mean, you've heard Adito lay out her own perspective and some of the effects that we might have for inflation this year. So, Andrew, I'm looking at possible increase in electricity prices. I'm looking at possible removal of fuel subsidy, or at least part of it at some point during the year, even though the government has come out now to say it's not going to happen. What sort of headwinds, or in fact, let me rephrase that. So do you expect more headwinds inflation-wise this year for businesses, or is it tailwinds? What's your outlook?
Well, I think on the inflation issue, I mean, first off, the general level of inflation, and there's been a very good comment in the chat, is not really that interesting. Everyone has their own personal rate of inflation depending on what they buy. In our context, I think over 50% of Nigerians spend over 50% of their income on food. So the only inflation that really matters for us is food inflation. And there's been, such a emphasis on the agricultural sector the last 10 years, but I see many amazing things being done by both private sector actors, the government's trying. Unfortunately, I think the security situation is undoing the efforts we're making in agriculture. Until we kind of make progress in the security situation, we're going to continue to have high food inflation and possibly even food insecurity around the country. So that's very difficult. The other point I'll make about inflation is it's really horrible. I mean, it is a tax on people that have less, right? I mean, people that are wealthy, I don't want to say benefit, but have ways of protecting themselves, of investing, of protecting their wealth. People at the bottom of the pyramid don't have any of that. So it's a highly inimical sort of thing that we have in Nigeria, and really, really very difficult. But at a fundamental level, again, I'll say, often we kind of, paper over some of these things, or we don't address the fundamental issues. If you go to India, the absolute price of things is probably 1/4 of Nigeria. Now, why is that the case? I mean, India is very similar in many ways to Nigeria, but over the last few decades, their infrastructure, the way they structure their markets has made a lot of progress, and things are just efficient, right? So rather than focus on inflation, I'd almost like to focus on the absolute price of things, and then we just aren't going to get the absolute price of things to come down unless we get the infrastructure, we get the efficiencies, we don't have the multiple taxations, all those issues. And the last thing I'll say is it relates also back to the exchange rate. I mean, while there are lots of things that we have to pay the world price for, so people go on about how wonderful the Dangote refinery, absolutely, but every piece of equipment there we paid the world price for. Maintenance that has to be done by foreign players, we're going to pay the world price for. Electricity, the generators, we're going to have to pay the world price for. The transmission grid, if we upgrade, we're going to have to pay the world price for. So while we continue to have this depreciating exchange rate, we're always going to have high inflation, and it's going to be very difficult for Nigerians. I mean, so how do we stop this depreciation of the exchange rate? Well, I'll go back to what I said before, and Dotun said, I mean, we need to attract investment. I mean, how do you get kind of balance of payments reversed, right? We've got the export of oil, which is declining. It's coming to an end. We have the export of Nigerian grains, which is great. But to really close the gap, we need investment in this country, whether it's portfolio investment or direct investment. And we should have if we had a successful economy that was growing, it would be like the equivalent of a capital sink, just like the Amazon's a carbon sink. So yes, we would be importing capital. It would be improving our exchange rate because the demand for Naira would be improved, but it wouldn't create problems because the economy is also growing to absorb all of that capital, and capital will want to stay in Nigeria. So unless we solve the investment problem, we're not going to solve the inflation problem. So just a few thoughts on the inflation, but again, it's just terrible for the bottom of the pyramid.
All right, thanks so much, Andrew. Faye, I'm going to come to you next, but I think Tom has a hand up. Tom, please go ahead, make a contribution. But hold that thought a bit. Let me just ask you this question as well. I also wanted to weigh in or expand a bit further on your comments on the CBN. We've seen rates relatively flat this last year, and the recently concluded MPC CBN still kept rates flat. It still kept rates flat. So would you expect rates to remain this way this year, or are we going to see interest rate go up at some point just so that they can tally up with inflation? Aditon.
Yes. Yeah, they kept the rate flat. I mean, what's the expectation of the market? You didn't expect them to do much at the beginning of the year. I mean, and the reality is, if which was the rebuttal I wanted to make to Andrew's comment about you wanting to attract FPIs. If you want to do that, it means you have to increase your rates, right? Because if global interest rates are going to go up, they're going to price that in when they're coming in, and that means that if you want them to come in, you have to increase their interest rates so that they can invest in your asset classes. That said, also don't forget that there's a 6.3 trillion deficit that's being funded by the federal government in 2022's budget. Half of that is supposed to be from local, right? So it means that they will be forced to. There's going to be a supply of government securities for them to fund that budget, right? So it means that they have to increase the rates if they want people to invest in it. I mean, that happened. We saw something like that happen in December where there was a bond issue, and because many people were not buying, they were forced to jack up the rate. So that we're probably going to see that go up again in this year, 2022. So yes, we expect rates to go up because there's a deficit to be funded that is even above what was said in the budget, because don't forget they had said that there's going to be removal, the subsidy removal will not take place this year. So that an extra 1.whatever trillion to the deficit that's already there. And I did not see them going to the international market at this point because of what's happening. There's going to be interest rates, rising interest rates. So it's going to be more expensive for them to borrow foreign than local. So I believe they will do much more of their borrowing locally. And that means that there's going to be an excessive supply of government securities. And that means that rates will definitely go up in 2022.
All right. Thank you so much for that, Aditon. Excessive supply of government securities. Expect that this year. She also thinks rates might go up this year as well. Because of higher inflation rate. Faye, I'm going to come to you next. Faye, I think we've often talked about inflation in several WhatsApp groups that you and I belong to, and even on social media as well. It's such a disease. It's such a bad thing. In fact, I don't even think Nigerians really understand the impact of inflation. I mean, look at the US. Everybody is running helter-skelter just because they're on 7% inflation, what they haven't seen in the last 30 years. Why is this so bad for small businesses? I think it's important we just give some of our participants here an insight into why you think inflation is bad, and sort of juxtapose that with the effect it probably has on our exchange rate situation and our ability to attract investments as well. Quickly.
Right, thanks, Ugo. Yeah, it's the world has been through a really big shock, with the pandemic, and the effects are still playing. I was reading an article, a rather funny article. Somebody did an analysis, I think it was in The Economist, they did an analysis of the last couple of years since the pandemic, and they found 30 songs that were released that mentioned STEMI. right? So when you have, I mean, so many rappers and everybody is now talking about stimmy, you know, the government, they pumped in a lot of money into the economy as a result of the pandemic. And it was not just the stimulus. In Western countries, especially in America as well, things like unemployment benefits also shot up. You know, so beyond the money that was actually just given out to people, they also, a lot of unemployment benefits, they rose to the level whereby it became possible for a number of people not to work, at least for a while. You know, so we have all of this, and you know, there is the classic nothing. I mean, when we look at it, is the classic situation we've always known: too much money chasing too few goods. You know, China has been erratic in terms of supplying goods, so supply chains have taken a massive beating, a massive shock. Even things like Ever Given, you know, the ship that got stuck in the Suez Canal last year. I mean, I was listening to one British importer was talking about how it set him back 6 months. You know, just that what we were all watching and laughing about on social media at the time. So all of these things have combined now to the point where we are now in serious trouble. And obviously, it's not that easy to unwind all of the money that has been pumped out into the economy beyond doing it with interest rate rises. So, I mean, Jamie Dimon was saying on their call, on the JP Morgan call recently, that he expects, people were saying 4 interest rate rises this year by the Fed. He said he expects 6 or 7.
6, yeah.
You know, so it's going to be, I mean, if you start off from very, very low and you have 6 or 7 interest rate rises in a year, I don't know whether it's going to leave us, you know, but the challenge is that I think Andrew mentioned this earlier about resilience at the start of it. That the truth is that a lot of Western economies are not as resilient as they should be. So once the pandemic hit, I mean, here in the UK, we've had all kinds. It's almost kind of like whack-a-mole. You know, that game where you hit something, it goes into the ground and it pops up in another place. We've had all kinds of effects where nobody ever saw this coming, because for a long time, the economies have just been running on just in time, so many little things that whereby, hey, nobody keeps any kind of too much supply. We'll always get it, you know. There are cars made in the UK, for example, whereby, you know, when you start off making the car here, you ship it out to Belgium or Czech Republic to go and put the steering, you send it to Germany to put the chairs, you bring it back to the UK. And all of this was possible because rather than keeping the steerings in the UK, for example, companies felt that, you know, rather, you know, we'll just do it when we need the car. So if you want to buy a brand new car, they can tell you get it in 2 months, and then the car just moves all around Europe to complete it, and then you get that car, rather than say a company keeping. So all of these things have been really beaten hard by the pandemic, and now, you know, we're paying the price now. So you'll see that which comes back to your point about how, quote unquote, as a Nigerian would say, ordinary 7% inflation Americans are running mad. But the truth is that, you know, a lot of economies here don't have that resilience. You know, they don't have, I mean, UK, we're dealing with about 5% inflation. You know, I feel it. I mean, this year, you know, I mean, normally I don't drive much because I've been working from home. So normally I buy about £20 diesel in my car. It lasts me for a week. And if all I'm doing is basically just taking my son to school, dropping in the morning and picking off, and it's not that far. But I've had to now I buy £30, and I can feel the difference, you know. So that's like a 50% increase. I can feel the energy costs have not yet even come in, because most of us are on fixed energy deals. So my deal, for example, I think it lasts upwards. So, but when that goes, you know, I don't know what the difference is. I currently pay about maybe about £120 a month. I don't know. That might potentially, I'll be getting very close to £200 a month when that finally fits in. Little things here and there, you feel it in the supermarkets when you go and buy stuff. You know, I mean, last time I went to buy some stuff for cooking, and I just thought, I've never spent this much, you know, at Tesco, you know, just to buy things to cook. But, you know, it's creeping. So people don't have, the Western economies have been, you know, they've been running on that smooth just in time where nobody really has to worry. And then now 5%, 7% is a really big issue. And, you know, expect political repercussions as well. You know, I mean, Americans are going to have their midterm elections this year. You know, I'm sure inflation is going to play a part in that, in whether real or imagined. You know, it's going to play a part in the campaign, and some people are going to hear it, as they say. You know, in terms of, so 5% inflation, 7% inflation. It's a big deal out here, and we, you know, again, the impact on Nigeria. I don't know. It's going to be interesting, because if we need to go to the market, for example, that option might be ruled out in terms of going to the bond market. So it's interesting times. You know, I don't think any major Western economy can even hit 10% without serious consequences. And I mean serious political consequences. So US 7% is just about what the maximum people can take. Here we have 5%. Germany is close. Germany and Spain, I think they are close to 6%. I don't think there's room for any additional bit more. So we might start to see a lot more coordinated central bank action just to try and stamp this down. But, you know, I mean, this is January. We'll see how things play out.
All right, thank you so much, Faye. Guys, by the way, we are at 15+% inflation here in Nigeria. Anyway, let's just move on. In case you're just joining in, this is Nairametrics Economic Outlook. We're looking at the economy as it affects your money, your investments, and of course, government policies as well. We are currently discussing inflation. We will still discuss investment opportunities for 2022, and then close with geopolitical issues. How does internal politics within the country affect businesses this year? So don't go yet. That is still coming up in this particular session. All right, so I'm going to come to you next. Femi, are you there? Liberos, please be on standby as well. I have a couple of questions for you still on inflation. And Femi, my own question for you is, high inflation does have its consequences for businesses. Locally, particularly in Nigeria. We've talked about how that can affect interest rate and as well as exchange rate. But in terms of imported inflation, some of the things that we bring into this country, where do you see higher inflation? Not in Nigeria now. We're looking at inflation in Europe, inflation in the US. What sort of industries do you think are going to be massively impacted by this? I'll give you an example. Someone was calling me today and saying, look, there is an increase in imported second-hand vehicles, and it's a problem for their business because they don't seem to be, making as much margin as they used to. So they're basically trying to, squeeze in their margins just so that they can push out cars. There are probably other industries like that. Please, I would just want your insight on that. And then secondly, should businesses be paying down loans now that inflation seems to be going up? Is it wise to pay down loans, or do you just hold on to your debt? Okay.
Okay, thank you very, very much, Ugo. And I think in terms of the impacts that we've seen, and Faye has made reference to some of the examples, what you find on the shelves now, the prices have basically gone up. Automobiles, electronics, those are the key, the primary items that have been significantly impacted. You made reference to second-hand cars. And I remember speaking to a friend that actually lives in Canada, and we're talking about it. And he says, if he had bought his car maybe like June or like, I think May or June last year, he would have paid, I think he talked about paying about $5,000 less than he paid when he eventually got that car, I think around November, December last year. So because you don't have new cars coming off the line, there's a pressure for second-hand cars, demand for second-hand cars, even in those countries. So imagine you now having those cars being shipped to Nigeria. And that's why in some of those countries, they are recording cases of, cars not being on shelf, but the demand has actually pushed the prices up a lot. So you have cars, you have electronics, things like washing machines, fridges and all of that, even when those things come to them, because we don't manufacture those products here. So as the prices are going up in those countries, they will also go up here locally. And the main culprits that they refer to is the fact that chips are not being produced, and those chips are not available. Now they're coming up the line, but definitely consumer products will be the most impacted. Also, there is a pressure on things like dairy products, meats that you find off the shelf, chicken that we also sometimes import here, fish. So those things are going to go up. The prices of those items are currently going up in places like the US, Canada, the UK. And so what it means is that as long as we keep importing them, we're going to import that inflation locally. What may help in our case is to then begin to look at how we can accelerate import substitution for the products that we already can manufacture locally and ramp up production for them. We know that cars definitely is not within our scope now, and many of those big electronic items. But for the small consumer items, how government can support the local manufacturers to be able to scale up, so that at least we can replace those those imported items and promote the local consumption of them to try and reduce the impact of imported inflation on the Nigerian economy. Now, in terms of whether to hold or to actually repay, well, it's a fine balance, right? It will look more like, now that inflation is high, whatever money you have, because of the impact you also have on the low interest rates that you have in other parts of the world, where you then think of any monies you get now, it's better to use them because the rates are likely to go up. So if I look at things like mortgage, where you have fixed or variable rates, you have people buying more homes now that the rates are higher. Sorry, now when the rates were lower during the pandemic in places like Canada, the US. So you would think about it that from a point of view, the interest rates and the inflation rates have to be evaluated jointly for you to be able to then make a very proper decision on whether it makes sense for you to repay now. If the value you get by retaining the money will be wiped out by the rate of inflation, vis-a-vis what you would have suffered if you had to pay back that loan from an interest point, then it may not make a lot of sense. So I think there's a need to evaluate from an interest rate point and from an inflation rate point what sense it makes for the business on when and how to pay back.
All right, thank you so much for that, Femi. Thanks for explaining that. But just to ask you one follow-up question, Femi, before I come to Liboros. So for people who have savings in a higher inflationary environment, I mean, would you want to save in local currency, or would you want to save in dollars or in foreign currency? Seeing how interest rate is going locally and abroad as well, or is there sort of a balance for anyone? Tell me.
Well, it will make sense for you to save. I mean, in our climate, it would look more sensible. It will appear more sensible to actually save in foreign currency, because as in addition to the high inflation rates that we would have, is also the risk or the challenge you have with the value of the currency. So if you continue to retain or hold your savings in Naira and the value of the Naira against the dollar continues to depreciate, you would then continue to lose value in terms of your savings, both from an inflationary point and also from an exchange rate perspective. But if you hold your savings in foreign currency, rates are projected to go up. US has talked about it, even the UK and I think in Canada also. So there are projections that interest rates will go up. The banks will raise interest rates as a way to mop up a bit of the liquidity that has come as a result of COVID spending. So try and mop that up, raise interest rates a bit. So you're going to get a bit of value. But in addition to that is the fact that your currency value is likely going to remain, how will I put it, sustainable, so that you don't suffer a lot of diminution in value because of the fluctuation in currency values.
Thank you so much for that, Femi. Finally, on inflation, Liboros, I'm going to come to you now. One thing that Nigerians do a lot, Liboros, I'm sure you might laugh when you hear this one, is what we call sachetization. Everything now is in a sachet. There was one Instagram picture I saw where they put Hennessy in a sachet. I don't know if that's true, but we're seeing a lot of things in sachet now. They also call it shrinkflation, where you see a can that is this big, but this content is probably just half the size of the can. I guess these are all ways that companies are basically trying to get ahead of higher costs and ensuring that their consumers can continue to buy, or their customers can continue to buy their stock. So are these legal things that you can do in this kind of environment, Liberos? And do you expect to see a lot more of this across, not just even for producers, even service providers as well? What's your outlook, Liberos? You're muted.
Yes, Ugo, thank you very much. And even though we call it sachetization, but actually the producers will call it segmentation of the market. Because with inflation, you would want to consistently reach out to as many people as you can. If you remember, Abiola, it was Abiola actually that campaigned with reducing the price of milk to 3 naira per milk. And when that didn't happen, Cowbell came to the market with sachet milk, and it was actually 3 naira then. And from that time to date, you have a lot of products now in sachet, including some of those products that you used to have in cans. They discovered that you can also have some of them the same quantity in sachet, so its cost of production is reduced. And here, the problem really is that we operate, for those of you that are economists, we operate a pseudo economy, where some persons will call this an abracadabra kind of economy. Today, you have a new CBN governor. Tomorrow, another one comes. It's try and error. And so when that happens, and there are no cushioning effects for, the manufacturer, the cost of production keeps going up, today we'll try, how do we, I remember recently I talked about the 2016, Ibe Kachuku are addressing the country and saying, look, the cost, petroleum product has actually been deregulated. And only for us, 6 years down the line, or 5 years down the line, we are still discussing deregulation. And nobody is even talking about buying crude oil at the wellhead price for local consumption. All of this will add to the cost of production for the manufacturer. And definitely, with fewer, like we all know, with fewer money chasing, more goods. So you definitely, a lot of people would find a way to segment the market and ensure that, their product, they push their product as far as they can. Just like in Lagos. That's why I like Lagos. If you are in Oshodi, you can consume what the man in VI and Lekki is consuming. But it's just that, while one is consuming in bottle, the other one is consuming in sachet. Recently, NAFDAC also said that they were going to ban, NAFDAC said they were going to ban some of these drinks in sachet. I do not understand the legal leg on which NAFDAC is standing with such a ban. That's why I said we operate a voodoo economy. So, legally speaking, the manufacturers are allowed to segment the market and push products that, suit the people depending on your income. So, but when you now say you've not come up with a superior argument to say food consumed in sachet is hazardous to your health, and then with a policy, you just say that you're going to ban those consumption. What you're indirectly telling those low-income earners is that certain products are for, certain categories of persons. And then that also will affect, the income of those manufacturers, and will in the long run affect the value chain, and will lead to loss of jobs. So, and then who takes responsibility for it? Nobody. And inflation rate will keep going up. That's why, for me, it still comes back to you and I. We need to demand more. I heard, I saw a question from one of the panelists saying that we overrate PVC. No, in fact, we underrate PVCs here. I tell people, if your PVC is worthless, nobody will buy it. for the situation where the politician want to buy your PVC for as much as 10,000 naira, it means that the PVC has some value. And it is that PVC that enables you, make input into those decisions that will either lead to inflation rate or reduce inflation rate. So if you want to participate in how inflation rate will reduce in the next 3 years, 4 years, 5 years in Nigeria, you have to participate in selecting leadership, which we hardly do here. And so I do not expect that the rates will drop in this year, speaking legally. And then from the decisions that government has taken so far, especially the regulatory agencies, which have no legal backing anywhere in our law books, I expect the manufacturers, to come out strong on this and fight, government regulations on banning, just a blanket ban on sachet.
On sachetization.
A lot of people, more people consume it at, the local areas. If you go to Oshodi, for example, you have most of these drinks that you consume in bottles in Lekki are consumed in sachet in Oshodi. So what that means is it still puts money in the pocket of the manufacturer because he has segmented the market. But government now is telling you that no, we don't want to allow this. So what government needs to do is to increase the purchasing power of those local, bring it at least to a reasonable level at par where they'll be able to consume those things, not in sachet, but in cans, in tins, and in bottles. Until we do that, we'll just be toiled with, rhetoric and semantics.
Thank you so much, Liberos. I like the way you put it. It's market segmentation, not sachetization. And if NAFDAC is thinking of banning it, not sure that would work. We're going to move straight now into investment opportunities for 2022. Let's look at the outlook for investment in 2022. Andrew, did you want to weigh in on the inflation topic as well?
No, I think we've covered it really well. So.
All right, fantastic. All right, so Adeto, coming to you first, and then I'll come to Andrew, and then we'll close with Feyi on the investment opportunities. We have less than 30 minutes left. We have to move this by another 30 minutes so that we can get in on some of the topics that we haven't discussed here. So quickly, Adeto, investment opportunities outlook for 2020. We'll talk about taxes, we'll talk about inflation and how that will affect some investments as well. But let's just home in now. So with the exchange rate likely, and this is likely, me saying likely to perhaps be devalued at some point this year, and inflation issues in the US and in most Western economies, and how that is already impacting on tapering and markets. You've seen global markets in a tailspin. You've seen crypto markets more volatile than ever. What sort of investments, let me rephrase that, what are your investment expectations for 2022? What do you think Nigerians should be looking at? And not just as individuals, but also as small businesses. Tom.
I think Femi had mentioned it, because we're in Nigeria, you face a foreign exchange risk. So the first thing I'll tell to any Nigerian out there, buy FX. I mean, I've been saying this, speaking this English, preaching this message.
Buy FX.
Buy FX, whatever it is. I know it's painful. I mean, sometimes you hear the rate and you kind of wonder, can it get worse than this? And then every day it gets worse. So that is a hedge against depreciation by itself. And then another opportunity is you have mutual funds denominated in foreign currency, so you could do that. I mean, so that not only are you hedged against FX devaluation, you also have a return in USD. So if you can invest in dollar mutual funds, there are a lot of financial institutions that offer that. I think EBI and Quest, we also have that. We have a mutual fund denominated in dollars that I think minimum is about $5,000, $10,000. I'm not sure about that, but you should do that. Also, another opportunity that will probably arise in Naira is also because not everybody that has that, I mean, that can buy dollars, is commercial papers. You probably see some of them come up during the year, and they will give you a higher return than than government securities. So commercial papers are also the way to go in terms of Naira assets, excuse me. Top of my head right now, I think those are the only two that I know that at least the retail investors can invest in that will give them a hedge against inflation.
Thank you so much for that, Tone. So just one last thing before you go. Where do you see foreign investors pushing money this year? I mean, when you look at inflation and exchange rate, and of course interest rate, they are not here yet, but I mean, let's assume that they decide the PTOs are returned this year. Where do you think they're going to go to? Are they going to go to the real sector? Because, I mean, you've seen a lot of startups raise a lot of money this year. So are they going to go to the real sector or to the tech sector, or are they going to come into, investment securities?
Well, the reality is, if you want them to go to the real sector, I think, I can't remember who mentioned it. It has to be the technological sector because of the barriers to entry. Nevin had talked about, things for Nigeria to do to grow in 2022, and he had mentioned the ease of doing business. We've done quite a lot, but we need to do more. Doing business in Nigeria is tough. It's a tough. I mean, anytime I see manufacturers, they are. If you can survive in Nigeria, you can survive anywhere in the world because you have multiple taxations. You don't know if you're dealing with the state or local government, you have the federal government. Then you have all sorts of ambiguity in terms of the laws and the processes and all that. And then don't talk of corruption. So coming to Nigeria to do business and bringing your money, it's tough. It takes guts and it takes courage. So I will say many of them will probably, which is why you see a lot of fintechs that have, and then of course you see Nollywood, they're doing quite well. But coming here to say you want to build a factory, you want to do that, it's tough. I will say it's easier to be a portfolio investor. Just bring your cash and invest in a government security, risk-free. But then that also depends on how willing are they to harmonize clarity in terms of FX. Let me put it that way. So you've seen quite a few investors that came in last year. I mean, Burger King came into Nigeria. You see some people like that because whether you like it or not, 200 million people is a market you can't ignore, right? So you see some people bold enough to do that. But then even what they do is they don't actually bring in the dollars, right? They tell you they bring in the dollars as collateral and then they take Naira because they don't want to exchange the dollars. And that doesn't really help, right? Because the dollar is still dollar, it's not in Naira. So for you to encourage them to bring it, to actually exchange the Naira, there have to be clarity in terms of what rate
exchange rate they're going to use.
And also, when I want to take back my dividends, are there constraints? Can I get my money out when I want to? And exchange rate is a touchy subject, but we need to, if you are serious about investing, it needs to be addressed.
Thank you so much for that, Adito. Andrew, I'm going to come to you next, Andrew. Andrew, last year we saw the likes of MTN list increase investor participation in the ownership of the stock. We've also seen Boa Foods list this year, now worth over $1 trillion. We've seen Airtel balloon to close to, at some point yesterday, over $5 trillion in market valuation. It appears that we're seeing bigger companies come to the stock market this year. I'm even hearing that Dangote fertilizer refinery might also consider listing at some point this year. We've also seen bank takeovers as well, the potential takeover of Union Bank by Titan Bank. We've seen what's going on as well in some of the larger banks in the country. And then companies or organizations are also seem to be tilting towards commercial papers to raise money rather than just bank loans. So are we going to see more of the same this year? From your outlook, of course, you want to juxtapose that with what is happening globally as well, with the US likely to increase interest rates, like we've said, perhaps maybe 4 or 6 times. Where do you see local Nigerians raising money? Is it riskier for them to raise money abroad, or are they going to focus more on perhaps listing on the capital market here, or raising money from the debt securities market in Nigeria? What do you think, Andrew?
Well, I mean, we've said for a long time we want to see the capital markets in Nigeria grow. We've said we need to have them 5 to 10 times bigger than they are today in in 5 to 10 years. And the SEC is just bringing out a new capital markets master plan or a refresh of it that goes in that direction. So we were very heartened by seeing these listings, and not just the listings, as you mentioned. I mean, the listed debt market for us, I don't want to say is more important, but it's just as important as the equity market. I think FMDQ has done a great job. And at a fundamental level, a lot of this financing, it's not really suitable for banks. The banks are both constrained in capital, and they also have short-term deposits, short-term liabilities. They're not suitable for long-term capital. So the movement to the more efficient debt markets, to the more efficient capital markets, both for equity and debt, is hugely critical for us. So we expect it to continue. And of course, there's some big pools of capital in Nigeria. I mean, we have the PENCOM assets just increasing so dramatically. And of course, they're very strict rules, as there should be, but I think they're going to play a big role in expanding the capital markets. So I really look forward to, both the NSE, FMDQ, the new commodities market that the CBN is starting, AFEX, which is already in it, all kind of rapidly expanding. But as I said, our view has been consistently the capital market. If the country is going to be successful economically, the capital markets need to start to grow very, very fast. And we had many years of no listings or delistings. To see some new listings, create liquidity on the market is really a good thing for the country.
Andrew, still on that, something else that has been on my mind for some time now is we've seen the world is increasingly becoming a global village, like people have always said, but we've seen increased investor participation in the global markets through things as something as simple as an app, as an investment app. So is there going to be a proliferation of that in the country as we move on? Because right now, you're seeing a lot of young Nigerians invest in the US market, just from their mobile phone. And some of them invest in the cryptocurrency market from their mobile phone. So how do you see this playing locally? Are we going to see a lot more tech-driven retail capital formation in Nigeria as perhaps the better way to raise capital? Or is it going to be the same traditional, just go list in the bond market, or just go to the Nigerian Stock Exchange and raise money? Andrew?
Well, I mean, if you need Naira, of course, you're not going to be able to list in London or somewhere else. I mean, I think there's a lot of innovation, but I mean, when you talk about what the young people are doing, I mean, that's from an individual viewpoint. It makes a lot of sense, particularly because of depreciating Naira, to have a diversification of assets. And it's fantastic that that's now accessible at low amounts, at least in my view, not in everyone's view, that it's accessible to people in a simple way, just on their phone at low cost. But the flip side for us is, we would like an economy that's strong enough that people outside Nigeria want to invest in. And particularly, we need to start with the diaspora. I mean, they're the natural ones that will, if it's attractive, will invest in Nigeria. So we need the products on the other, or the apps on the other side, that allow the diaspora to invest in Nigeria in a very simple, transparent way, in a system that they trust. And of course, there's some work on it, but we haven't kind of seen the breakthrough on that. But I'll be very excited the next few years. I do think there's going to be more and more products that allow the diaspora to invest safely and securely in good governance in Nigeria. So that'll hopefully counterbalance. But if Nigeria is the biggest economic opportunity on the planet for outsiders. So if we turn the corner, our problem is not going to be attracting capital. Our problem is going to be dealing with the rush of capital, just the overflow of capital on that. So we need to reach that tipping point where people want to give us more capital than we can effectively take.
All right, thank you so much for that, Andrew. And by the way, our dear panelists, please, there are questions for you on the chat, the Q&A chat. Please, if you can just, take some time, go in there and respond to some of those questions. Some of those questions are directed to you guys specifically. Feyi, I'm going to come to you next for this one, still on the investment side of things and investment outlook, and I will just close that with you. We've seen a lot of activities in the startup space over the last 4 or 5 years. However, a lot of that money seems to have gone into fintech, either through the payment side of things, or those trying to democratize lending and investment. Now that we're seeing a global shift in perhaps how fund managers or how capital is going to be flowing around the world, where do you think is the next phase for raising funds in the startup sector in Nigeria. Starting this year, is it going to be more of the same fintech space, or do you think that we're probably going to be gravitating somewhere else? Some people mentioned healthcare, some people mentioned transportation as one of those areas where they're seeing money go in. But I mean, what's your own perspective, Faye?
Yeah, I mean, I hope that the flow of money doesn't stop, is not jeopardized, because apart from the fact that foreign money is coming into the Nigerian startup space, what foreign money does is, I mean, there was an article about this a couple of days ago, but it's allowing local investors recycle their capital. So if you take a risk on a startup very early, it's very, very risky bet. Take that risk very early. 2 or 3 years later, the business becomes, viable. A foreign investor comes in. You are able to, how this funding round works, pre-seed, seed, series A, B. If you enter the pre-seed, somebody comes in as series A, you're able to take some money off the table. And it's not just money you're just going to blow. You take that money, you recycle it. So it's allowing a lot of that happen, whereby you take things like the Paystack deal, for example, that happened. A lot of people who made money from that Paystack deal have simply put the money back into other startups. So when you see all these new startups, you see on the cap table, you are going to see people from Paystack, from Flutterwave, so all of this is, I'm praying, I'm hoping that, apart from the fact that people are getting rich, that recycling part is the key one for me, and I hope it's not jeopardized anytime soon. In terms of where things will go, probably, I'll probably say people are going to double down more on fintech. Yeah, I mean, it probably not. It maybe is not a good thing. I work in finance, but I'll probably say financialization of everything is probably not always the greatest. So we would like to see more things. So there's stuff happening in health. There's some interesting things happening in there. I hope they'll see a lot more money. But if things get tight, unfortunately, anything non-finance will probably be the one that suffers the squeeze first. So I'll probably say, if money gets tighter, if flows reduce, then whatever money comes in will probably go more to fintech. Fintech is scalable. If you start a fintech in Nigeria, for example, even if CBN is disturbing your life, you can move across West Africa or across Sub-Saharan Africa a lot easier. You can sell a service, beyond just saying you have to build something physical. So I guess when people are evaluating fintech, that plays a lot into the fact that even if one country is difficult, they see the potential that, okay, what happens if, this fintech starts from Nigeria, is doing okay, but what happens, the valuation is what happens when we scale it across Africa? And you see, people are not valuing Flutterwave at over $1 billion because it's a Nigerian business, it's serving the Nigerian market. It is an African business. That's where a lot of people are looking at it. So, I guess my suspicion would be that fintech will probably suck a lot more of whatever funds. And it's not always a good thing, but I'm hoping that we see more diversification. But that's just the reality I think will happen.
All right, thank you so much, Faye. Femi, let me come to you quickly. This is something for you and I think we discussed a couple of days ago in the chat group. But let me get your opinion on this, Femi. Jobs and the way that we're seeing human capital move around the world now has basically changed. You now see a competition for skilled talent now, and people can basically live in Nigeria and work anywhere in the world, right? So how do you think this is going to pan out this year? Are we going to see, is it going to be increasingly more difficult to retain talent this year? Or would you see maybe some of all this pressure dissipate because the world is now, the world is probably going to change now that COVID-19 seems to be seen now as just a regular flu. And of course, a lot of that cheap capital that has funded investment across the world might probably, dissipate as well this year. What's your take quickly, Femi?
Okay, so to to make reference to a point, I think it was made by Andrew earlier, that if you look at the population, the demography of the population in many of the developed countries, they have they have mostly an aging population. So there's a real need for the working class or the working population to come support a lot of the industries and businesses that they have. So definitely there's going to be the need for skilled labor to move across, and we're going to still suffer a bit of that. So Nigerians are still going to go. You have doctors, accountants, lawyers, you have people that will cross because there's a need for that skill gap, or there's a need for skilled labor or a skilled population in many of the countries. However, if you then put that side by side with the fact that there's also going to be a cap on number of people that can fiscally migrate because of maybe the restrictions on visas and all of that, there's going to be the need, or there will be an increasing need for people, or ability for people to work across borders. That has been aided by COVID, now that we can work from anywhere. You know, so jobs that can be executed from anywhere without fiscally being there, they would see more of the ability of Nigerians to work across. You have companies that are doing that now and enabling Nigerians to freelance, especially in the tech space. So there's going to be a lot of that more this year, but also for jobs that would need fiscal labor, we would have definitely still suffer a bit of migration. There'll be demand for Nigerians, there'll be demand for people who can do those skills, and those things cannot be done remotely. So we'll still suffer a bit of those drain, but coupled with that, we'll see an increase for jobs that can be done virtually. We'll see an increase for demand for Nigerians that can do that across. So
Thank you so much, Femi.
both.
Mix of both. All right, we're about wrapping up. We want to wrap this up by 1:30. So we're just going to quickly go into political situation. And Liberos, I'm just going to allow only you speak to this. This is likely going to be one of those years where we'll see stiff election battles ahead of the 2023 election. So for a lot of the businesses or private sector individuals on this call, what sort of political climate are we expecting to see this year from your own point of view? And what should we be doing as businesses to mitigate against any potential fallout from here? Quickly, just in about 3 minutes, Liberos. Thank you.
Yeah, like I always say, let's get involved more. As we speak, do you remember recently, sometimes last year, I will start quickly with the electoral umpire, because there's this tendency for us, to get lost with the regulatory bodies and electoral umpires. Sometimes last year, the president attempted to nominate one of his aides, Loretta Anoche, as a national commissioner in INEC. The media resisted it. A lot of people, talked about it, and eventually the National Assembly had to succumb. Again, recently, we had some national commissioners that had performed exceedingly well, that had been transparent and above board, but unfortunately, their tenure were not renewed, because that's the prerogative of the president. Somebody like AVM Mazu in Bauchi, somebody like Professor Ibiano in Anambra State, so that people can actually follow. The professor that conducted the election, in Anambra, that the opposition won, his tenure was not renewed. By August this year, about 27 national resident electoral commissioners' tenure would expire in INEC. And so, if these resident electoral commissioners are not renewed, we'll struggle to nominate and screen new electoral commissioners who will be learning on the job. And then secondly, some of the INEC also had released guidelines for elections. And the reason why politicians are involved and so much interested in what happens in INEC is because usually electoral disputes, election rigging is very difficult to prove in court. So politicians would want to manipulate the process starting from the umpire. And when you do not participate, in the process, mind you, like they buy PVCs, they mop up PVCs, be sure that somebody will participate for you be sure definitely of that somebody will participate for you. And if you have electoral umpires that are compromised, like they're already attempting to nominate their cronies, like the lady from the South nominee also has been busted by, I think Premier Times or one of these, journalists also, to be a card-carrying member of the ruling party. So when you have a compromised electoral process, it takes the entire country participation to actually determine the kind of leaders that they want. And now you hear people debating between, oh, this one is too old, this one is not strong enough. It is not enough, like we always say, there are no polling booths on social media. So it is not enough for us to debate it on Twitter, debate it on Facebook and Instagram. It is for us to actually participate. We talked about doing business. They talked about doing business in Nigeria being very difficult. And I saw how passionate she was when she was discussing it, because it's actually difficult because you have the worst of us ruling the best of us. And so if you continue as we're marching towards another election cycle, if we continue to relegate or relinquish our responsibilities to participate in election to the everyday sachet people, you will discover that those people will consistently determine your production. They'll determine the economic outlook. They'll determine the businesses in the country. So the best way to determine how business would look from 2023 is to ensure that you participate in people that will take those decisions, those policies that will shape the business climate and environment in Nigeria. And then quickly, let me say something on that NAFDAC issue. That's why I say people should participate. If you allow NAFDAC to, have their way in banning some of this sachet drink, before you know it, they push it to other sachet products like sachet milk, sachet salt, and then so many other things. And then gradually, they have so much power to do these things. And before you know it, they now tell you go to court. And we know that here, like I say, the windmill of justice grinds slowly, but we forget that justice delayed is justice denied. So, and that's why we have to, as the policies are coming, it is not enough for us to attack them on social media. If you can employ a lawyer to challenge some of these things, do them. If you as a lawyer can also challenge them, public interest litigation also is very key, and we help shape economic outlook, come this year and next year.
All right, thank you so much, Liberos. Thank you so much for chiming in there. And thank you so much, everyone who has listened so far. We actually have gone past time. This session was meant to end at 1 p.m. So again, there's a recorded video. You're going to have it up on Nairametrics channel on YouTube in the next couple of days, if not even today. So look out for that. And then also watch key nuggets on our Instagram pages as well. I hope that you guys have all benefited immensely from this economic outlook webinar. But as usual, we will do a final remark, a closing remark from our very intelligent panelists. Thank you guys all so much. But closing remarks here, I'm going to start first with Adeton, ladies first. Closing remarks in 30 seconds. Just summarize your outlook for this year. Are you buying, selling, or holding Nigeria this year? Just summarize it. What are you doing? Summarize Nigeria for us.
Well, I'm definitely buying Nigeria. I believe in Nigeria. Yes, we have our different challenges, but I still think high risk, high return. The returns are definitely worth the risk. So yeah, I am buying Nigeria.
Fantastic. Thank you so much, Adeton. You heard her. She's buying Nigeria. Andrew, are you buying Nigeria? Andrew is always possible on Nigeria. Anyway, Andrew, are you buying, selling, or holding Nigeria? And of course, you can also chime in on your outlook for the year. You have to unmute, Andrew.
No, I'm buying Nigeria. As I said, I'm more optimistic than any time in 13 years. I think we're going to reach a tipping point. I think the forces of evil are going to be overrun by the people trying to do the right thing. It's Nigeria, as we know, is a self-organizing nation. People are just moving beyond any deficiency of the public sector and doing the right things for Nigeria and themselves and their communities. So I'm buying.
Fantastic stuff. Andrew is buying Nigeria. Femi, what's your outlook this year? Buying, selling, or you're holding Nigeria? What's your outlook?
Well, I will not want to differ with the rest of the participants, so I'll surely buy Nigeria. I think this goes to something that was mentioned when one of the panelists was speaking. I'm excited that this is an election year. Sorry, this is an electioneering year. So I think I'm really excited about the way things are beginning to shape up. So I'm eager to see how elections will shape up into the new year. I have my PVC, so I'm definitely buying Nigeria this year.
Fantastic. You got to get your PVC, guys. We cannot afford to complain again for the next 4 years. If you want to buy Nigeria, get your PVC, but don't buy PVC or just get it free. You're up next. Buy, sell, or hold Nigeria. Are you going to break the streak?
I'm buying and holding, actually. So I'm buying some parts of Nigeria. There's some parts of Nigeria, but I'm holding. I have a minimum of a 5-year, outlook on Nigeria right now. So anything I buy now, I'm having a minimum of a 5-year outlook. So yeah, I'm buying and holding. Yeah.
All right, fantastic for you. Thank you so much. But any major closing remark for you as well, besides that?
Well, I mean, I wrote an article about a few weeks ago or some late last year that, about how, I mean, I don't want to sound too boosterish or too fancy type thing, but, in the middle of difficult times, whatever will be good in Nigeria in 5 to 10 years' time would not happen in 5 to 10 years' time. The seeds are probably being sown now. So some people are, there's a lot, I mean, people are building, people are doing stuff. They are boldly doing it, even with all the craziness happening around them. So, I'm buying those parts of Nigeria. And I think don't allow 2030 to surprise you in terms of when you get there. Whatever might be big then is probably happening now. There's some seeds being planted now. As difficult as things are, as crazy as Nigeria is, and it's a huge challenge, to do anything in Nigeria today. But I think the key will be anybody who builds now and holds out. They're going to come out, and I gave examples like Disney was founded in the Great Depression. In Americas, and several other companies like that. The idea of soap operas came out of the Great Depression and all of that. And those things have lasted that difficult
for centuries.
So, so I think that's what I'm kind of looking at. Things that might be built now. Even if you're not going to make money now, but just in case Nigeria turns the corner in 5-10 years time, the thing you are doing now, how would it fit into a much better economic environment, even if you start it in a difficult one? So that's kind of stuff I'm looking out here.
Fantastic stuff, Faye. Thank you so much for that. Liberos, finally, for you, are you buying, selling, or holding Nigeria 2022?
I've always been buying and holding Nigeria, and I'm one of those that have consistently, maintained that a lot more people, if more of us buy and hold Nigeria, we will not leave Nigeria to, those that are currently managing it. We can do better. We have a lot of human resource capacity. And then, but it is good that Nigeria has happened now. It is happening to all of us. It is good that it is this way, and it can only get better from now. And you see the awareness. Everybody's saying, let's get involved, let's get involved. If it didn't happen this way, we probably would have been very lackadaisical. And so that's why I'm holding and buying Nigeria, and I've been doing that, and I'll continue to do that.
Fantastic stuff, guys. And, on behalf of everyone at Nairametrics, to the organizers, to our panelists, to our Nairametric followers, every single person behind this seminar, this webinar, we thank you so much, our dear panelists, for coming. You guys have been brilliant thus far. Appreciate it all the time. Thank you so much. And of course, signing off here, me, Ugo Dre, Obichugo. I'm also buying Nigeria. I'm very positive about what's happening in this country. Chip in, buy Nigeria, hold Nigeria. It can only get better. Besides, we sell Nigeria. Where else are you going to go to? All right. Thank you guys so much. I appreciate your time and effort. This is me signing off. Happy New Year, everyone. And please enjoy the rest of the year. Yeah, yes, bye. May this be a profitable year for everybody. Goodbye.
All right. Bye.